Hello, hello, good morning, good afternoon. All right. Hey Alfred, hey Namaste James. Sam, you got confused last Saturday? I don't know. I mean, always meet at the same time. So unless I've canceled it on Meetup, right? So hopefully your other meeting was good as well. JD Walker says you were here last week. So thank you for showing up again. Hopefully, it was useful, and I hope to see you, in coming weeks as well. Uh, Not allowed to unmute. Oh, Aditya. Oh yes, I do wanted to share. I attended one shareholder call, and then I thought maybe I should also implement this. So this is the deal. Um, I forgot which company's call I saw it. So that the idea was that if you want to speak up, raise your hand and turn your video on and we'll unmute you. It's like analysts were asking questions and the conference operator was saying, "Hey, turn your video on and ask questions." I was thinking, I'm like, maybe I should do that as well because I don't know many of you. I won't recognize many of you if I meet you in person because I've never seen the faces. And I thought maybe I'll try this from this week onwards. If you want to ask questions or speak up, raise your hand, or turn your video on, raise your hand, I'll unmute. And so that's what I thought. And in fact, yesterday I was in another meeting. You guys know on fourth Friday of every month, I do go as a judge in a startup pitching event. And someone walks over and say, "Hey, Vivek." I'm like, "Yeah." And he, I don't know if he joined yet or not, but he recognized me. But I was like looking as a fool. I had no idea who that person is. But he's been attending our meetings for many months. So that gave me another reason of maybe I should do what that company did, which is if you want to speak up, raise your hand and I'll unmute. And at least I'll know that there's a real person behind it, no bots. Right? Okay, what else? Uh, Good morning, morning, Mashur. James says, great idea. Yeah, let's try something new. I mean, otherwise it gets boring. It's just me. Added some positions to Netflix and PayPal. Okay, I mean, Netflix has the stock reacted very positively to the news that Netflix is not gonna pursue um, the acquisition of Warner Brother Discovery. I think the stock was up 11%, 12%, whatever. So which was a good news for Netflix shareholders. I sold Netflix short put, I think maybe a previous month, which I rolled to April. So far so good. PayPal. I didn't add anything to PayPal. There was an acquisition news around PayPal, and I think that's why the PayPal stock went up. That's the only thing I knew around PayPal. Where did you go on Friday? There's a dojo community in Bay Area, and they do it every fourth Friday of the month. They have a startup pitch event. So I went last year. I went once as an just to attend it, and then I somehow ended up on the judges table, and then they said, "Why don't you come every month?" And I've been going there since it's been my what last maybe I went April, May. Yeah, almost a year. It's fun. It's fun to see what other founders are thinking, what's hot in the market, what they are thinking to build, and I was discussing with organizers that just like any other investing meetup, even the attendance in the startup pitching event also is dependent on how the markets are doing, how the company stocks are doing, right? So if the software company or a company stocks are doing great, I've I've seen close to 100 people attending that event, and yesterday the crowd was very thin, maybe 50. And I was wondering that this is what happens. If the crypto is high, you will see a lot of folks coming there and talking about new projects on crypto. In fact, there was yesterday one guy was talking about it. He pitched the new decentralized exchange with the speed and reliability of centralized exchange, but still, self custody stuff like that. But and nobody had any interest. So yeah, it depends on how the market is doing. JD Walker say, plan to use the wheel strategy, covered call on Netflix and PayPal. Yep, you can never go wrong. Depends on what's your outlook is. I've not been selling calls against my PayPal holdings for last 2 3 months, ever since it fell down, was like near 40. I'm just waiting for it to be around 50, etc. So I'll start to sell cover calls again on it. Netflix, I don't own stock just yet. I just have a short put which I've rolled. Maybe once I own it, I'll start doing it. Are you adding any positions due to the strikes in Iran? I only got to know yesterday night when I came back from the meeting. I came back like 10:30, 11 o'clock, and then I saw the news. I'm like, what? We're looking for another war? No, I'm not making any changes. I mean, it's too late to make any changes. But I guess we should see um, investors going towards risk averse assets. Maybe I expect gold to maybe go higher, oil to go higher, even though Iran only produces 3% of overall world oil production. But it is at a strategic location where it could, disrupt the overall transportation of oil because it passes through Strait of Hormuz. Right? We haven't seen the evidence yet, but that's the reason. I mean, market may feel jittery around it. Defense company stocks could go higher, but again, I'm not the one who would make a quick changes in portfolio just because a particular event is happening. Right? Then I will always be chasing around what's the latest news, right? That's not that doesn't gel with my style of investing. So I'm not going to make any big changes in my positions. All I would do is if the market falls down on Monday, which I assume it will be because of the concerns. Again, we don't know what could happen, right? Uh, but if the market falls down and I have a lot more deltas in portfolio, I will just do management deltas. I will probably start selling more calls on portfolio. But I don't plan to go ahead and, let's say, load up on gold or precious metal or defense stocks, etc. If it is in the news, probably I'm already late. So yeah, unless that company is really a good business, right? I just don't want to own it uh, only for um, a particular event that a company will benefit, because then I don't know what after that event happens. Then what you want to do with the stock? It just doesn't gel with my style of investing. Okay, what else? New contract to sell missiles. Yeah, yeah. You do follow. Yeah, I follow news. Following new, knowing what's happening and taking action based on that are two different things. So I do follow news. I do listen to a lot of analysts, but at the end of the day, I want to make my own decisions on how I want to run my portfolio. Okay. Hims took a nosedive. I mean, I don't even know why people would invest in Hims. We have had so many discussions on Hims and hers, right? It had its own day when the GLP drug was in shortage. So these compounding pharmacies were legally allowed to manufacture it. Once it went off the FDA shortage list, then I didn't. I had no idea what's the business model or behind hymns that would carry it forward. I mean, the sharp rise that we saw in hymns was only because they were selling the GLP drugs, because they were allowed to collaborate with the compounding pharmacies, right? Once that stuff tailwind was taken off, then it's just like any other online um, online clinics, and I've seen many of such clinics come and go, and that's why I never took a position. So, from a business perspective, I wasn't really keen on hims and hers as a business. What else? So, I think we got a decent crowd. Which defense stocks am I in? None. So I don't think I own any of. Oh no, if you call Boeing as a defense stock, then I do own Boeing in my portfolio. But I owned it for now. I bought Boeing uh, when the 737 MAX fell out of air, right? And then the Boeing tanked. And this is what happens, right? It's like a kind of a falling knife. If a stock can fall 40%, it can again fall another 40%. And that position I'm still holding. Other than that, I don't have any um, other defense individual stocks. I do have a defensive stocks in portfolio. That's again through ETF, but no defense stock. What's my current portfolio split? So I will reveal my top 15 positions of my portfolio today because today is the first day after the month finish. I mean, trading month has finished, right? We still, today is the last day, but yesterday was the last trading day. So I always share my portfolio, top 15 positions in the first session of the next month. So you'll get to see what it is. You want to break up? Let me see. I don't have it mentioned in the doc, but I can talk through it in terms of what's my breakup is because I do track. How about ARKX ETF? What is ARKX? ARK has so many ETFs. Is a defense ETF or what ETF it is? Okay, ARKX. I don't own this. And again, whenever you're looking or holding any ETF, always pay attention to what the holdings are because I've seen that the holdings do not reflect the names sometimes. So let's look at PRKX, LHX. This looks to be space as well as, yeah, space and defense. Rocket Lab, Teradyne. Uh, I don't know why K2S is, it's because a defense contractor, right? Aerovarment, but I don't know. Now, John Deere, you consider that as a defense company? AMD, is that a defense company? You can claim. I don't know. Google is a defense company. Amazon, Nvidia, Joby Aviation. So if I were to, I don't think this may, if you are assuming that by buying ARKK you get exposure to the defense related companies, there are a lot of other things that are involved in it, right? You're still not getting that exposure. So always look into what the individual holdings are and then decide. DEFN. Let's see if that's better from a DEFN. DFEN. Oops. DFEN. Oh Jesus, this is like 3x. I don't do leverage one because leverage are only for very short period of time. You should not inventory these leverage ETFs. Um, yeah, G Aerospace, RTX, they got every other thing. Hallmark, Northrop Grumman. This is to be little more representative around defense than the ARKX was comparatively. Yeah. 15 is a lot. I know I think today somebody, I do post my holdings, end of a month holdings on Twitter, and somebody did comment saying there are too many colors in this pie chart. And my answer to that person was, you know, um, I'm not the one who believes in going all in. So that's the reason. Do you feel 15 is a lot? I don't have, some of them are ETFs, so I don't have to spend too much time on it. My main focus will be on individual companies, uh, out of which, again, the fewer number of companies account for a bigger portion of individual companies in my portfolio. Some of them are dust, which I've held it for many years, very small portion, but again, doesn't hurt to just keep them on, just in case some of them revive, etc. So, but yeah, I mean, I'm happy with whatever works for everyone. So I'm happy with the with my holdings, and so that's what it is. Okay, what else? Are you into ETFs when looking to diversify portfolio, more individual stocks? So if I understand that business segment, then I will pick individual stocks. If I don't think that I have a capability to understand that business, what drives competitiveness, how, if I cannot read the balance sheet or the financial statements, if I cannot understand why one business could be better than others, then I will not pick individual stocks, right? Then it is very difficult for me to put a bet on an individual company because I would not know how best to understand its statements and its business profile, right? And then I will go with the ETFs. For example, I have I will have a very hard time in understanding, let's say, biotech sector. So I don't own any biotech. I don't understand pharma sector. I don't understand, the overall how the clinical research work, how long does it take, and there are regulatory aspects around it. I don't understand that. So if I were to take a healthcare exposure or pharma, I will just go with an ETF, right? I don't understand oil sector, right? So my is XLE is my go-to ETF. Based on that, I'll decide whether I want to go ETF or do I want to go individual sectors. How much percentage are you up on? I don't know, on means on an individual stock or looking at, okay, end of a month. Maybe today is the last, so I don't know. You'll have to qualify what's your questions around. Okay, cool. All right, so guys, let's get into today's session. Welcome everyone to our discussion. So discussion number 313th of our Saturday investing discussions. So my main motive for today's topic for today's discussion was looking at 13F filings. As you guys know, 13F filings are filed by fund managers who manage at least $100 million of external wealth, and every quarter I look into those filings. I mean, you can go and look into those filings, those are available, and there are some sites which will basically give you the list of all the fund managers and their holdings. What the way I want to look at is a consolidated view. I consolidate the data from almost 90 plus fund managers, which give me a different view of how so-called the smart money is allocating their capital as a group, right? Not as an individual fund manager. What an individual fund manager do quarter to quarter could be very different. They have different motivations, and I do want to talk about some of them. But collectively, how they are allocating capital gives us different insights. So I will share you the collective view of it around how various fund managers are allocating their capital. So that's a main topic. I'll cover a couple of earnings. Um, and of course, I'll start with the overall macro stuff on, hey, what's happening at a high level, etc. And give you a peek into my top 15 holdings on my portfolio because this is the first session of a new month. Okay. All right. Anything else on your you guys' mind? Again, those if you're finding why you're not able to unmute from this today's session, we're trying to implement something new which I learned from a company's investors earnings call like that I joined, in which, hey, if you want to speak up, turn your video on, raise your hand, and I'll unmute you. All right. So as always, anything that we discuss here is only for education. So don't go and trade based on solely what you hear in this meeting, right? So before I start, you guys know I was in India last week. I came a couple of days ago. And there's something I tried. I heard a lot about this service, but I tried something new, which is a buy now, get now, right? These are kind of quick commerce services in which you get your, whatever you order in a very under like depend. I said the max time is 20 minutes, right? So and it was a very different experience. I mean, we are used to same day delivery on some cases in Amazon, next day, 1 day delivery. But this was like I ordered it and it says arriving in in 7 minutes, right? Those who are aware of the ecosystem on India, there is a service called Blinkit, which is what it does is it. We have a similar services in China also, but I think these are the only two countries that I know of. Maybe some other South Asian countries also have this quick commerce because it can only work in those countries. But it was amazing to see. Uh, Previously, last year when I went, it was my nephew ordered for me, but this time I said no, no, I want to order. So I opened an account and went through the whole process of ordering myself, and then I got hooked to it. Right, 7 minutes. In 7 minutes, I can't even get down from the apartment to the parking to the basement car parking, and can get out of the apartment complex. I can't even do that. Whereas, it's in 7 minutes the delivery um, is at my place. All right, I'm seeing some marketing messages. Sorry, I have to tap you out on the chat. Who's a phone? So, oh, nice knowing you, but thank you. All right, so I'm like, wow, this is amazing. And then, for especially for the stuff that you really don't need have to touch and feel and choose for yourself, some of those branded pre-packaged stuff, there is no need for, I mean, for me to take the car out and drive and then go, right? All right, Sam, do you have your hand up? Turn on your video and I'll unmute you. All right, so what's your question, Sam?
My comment is, we had this in Shanghai 13 years ago, 4 hour delivery.
Yeah, I mean, I've seen this in services in China and in India. These two I'm aware of. I don't know if in Singapore still there or not, or in other South Asian countries there or not. I will talk about in China. I do have a note on this service in China as well.
Okay, I'm making another comment.
Sure.
1997, I wrote a train from Hangzhou to Shanghai. That's Monterey to San Francisco in 2 hours. That's 120 kilometers per hour. This is 30 years ago. So
Yep, I agree. Infrastructure-wise, China is far ahead, far ahead. All right. So let's continue that discussion. And then I was thinking, how are they able to do all these things? Right. And then I realized it does tell me that where the nearest warehouse is, which is like 1.5 kilometers from my place. It means it does say, right? Your Blinkit store is 1.5 kilometers away, close to a mile, right? And then they have this delivery, so guys who are on two-wheelers, so they can navigate the traffic, right? The traffic is hell out there, but they are on a two-wheelers, they can navigate the traffic and come quickly to deliver the stuff. So and then I probably in 2 days I use this service like 5 or 6 times because why would I go out? How to go out in under hot sun, and it will take me more time to go and get the stuff when I can get it delivered at my place in much quicker way. So yeah, no wonder my brother keeps complaining that the kids are all using Blinkit, and I'm like, dude, I got hooked to it. So forget about the new gen kids, I got hooked to this one, right? Where in India I went to the up north part of India. From that's where my family is. All right. So few things to note here. One is that the way they are able to do it because they maintain only very small quantities. They have a small inventory of individual items. So for example, I ordered some stuff And then I said, I want to try it on before I order another additional quantity of it. So I tried it on. Next day when I tried to order it, it says it's not available. So that stuff, I actually went to a retail shops and asked for the stuff. They didn't have it. I looked it on Amazon India. They didn't have that stuff. When I looked on a Blinkit, I found it. I'm like, okay, let me order it. Let me try this on. If this is good, then I'll order more. And I ordered it. I liked it. But for the next day when I tried to order it, it says it's not available here. Then I what I also thought that I had to go to my in-laws place in a different city. I thought, let me give my dad as a destination address and then let's find out. And they say it's available over there. Then I realized that they have a what they call as a dark warehouses, like small shops. They will have it in which they will keep the minimum quantity, very limited quantity of each SKU. And if you order it once, it need to be replenished from a big warehouse, the mother warehouse, right? But if you order it on a deliver on another location, that would be served by another small shop which maintains the inventory for blanket. So that was one learning. And of course they have a lot of these dark warehouses, which is all they do is just maintain the small inventory for them. The biggest difference why we have it in India and China is labor arbitrage, right? So Amazon in US, they we can implement all the tech stack that they have, but what we cannot have in US is a labor arbitrage in which you can deliver it and have a human come and deliver that. So I think that's the one which will not be able to, especially the developed countries, will not be able to have that. And that's why I don't see this quick commerce in any of the developed countries. All I hear is in India, and then there was another news. This came out, I think it's last week, is how the multinationals are racing into China to capitalize on 1 yuan instant delivery market. Now the big brands like IKEA, like Continental, the German tire manufacturer, Sam's Club, Aldi, they are all entering into Chinese market to give this instant delivery, right? Like IKEA will deliver you furniture in under 1 hour in China. Can't do it there. All right, I see Win your hands up, but you know the deal. All right, go ahead.
Yeah, I'm curious about this, right? There's nothing to investment, but the margins would be very low in this kind of business, Vivek. I just wonder why these guys are entering, right? I can't imagine high margins.
So you're talking
It's just
about why
maybe
these,
customer reach, right?
yeah, so why the multinationals are entering?
Yeah, yeah.
Yeah, because the volume is really big, right? So they are looking at a retail market in a instant retail market will be close to a trillion yuan and probably get to 2 trillion yuan. So even if the margin is low, but if you can make up it on volume, some of these
Mm.
multinationals will survive. And other thing is, I think Blinkit and any of the other companies, I think as a standalone, you can't make money on this one. You have to have other additional businesses which could subsidize it so that you can capture the market. Because like you said correctly, the margins are very low. And probably some of, let's say in India, Blinkit, etc., is being subsidized by initially the VC capital, and now I think Zomato has taken them over or some other, and so now they are being subsidized by the public market funds, right? And I I don't think as a standalone it could become a profitable business. But from a consumer so as an investment wise, I won't touch these companies as an investor. But as a consumer, I love the service,
Yeah.
right? So and I see this on it's on China, a lot of competition around it. Let's say JD.com, Alibaba, etc. Everyone trying to do it. But I think at least I didn't check that in terms of what kinds of brands are available. But I on when I saw this on newspaper, I saw that wow, you have like a big brands like Aldi and IKEA entering into this space. It's not just like you can just order some groceries or prepackaged foods or some smaller items. Even the bigger brands want to capitalize on this one. Okay, so that was a new learning for me. I thought I'll share. There's some comments on human arbitrage, the real reason of all layoffs in US. That is true. How the US um, micro Walmart warehousing strategy. That's exactly it is. Uh, they say robots will do it. We're waiting for it. Right? We cannot have a human to come and deliver. Right? It could be a robots combined with AV vehicles. Right? Autonomous vehicles coming in, and then the small robot coming and delivering you. Or we have those robots which I think Walmart is tying up with Zipline, or Amazon has it. Right? They in some portions of US, I think in Texas, etc., they've already started doing this 20-minute delivery using these drone deliveries. Right? So it will happen, but it will not happen. Will not a human will not be involved. Right? And then when it comes to the drone and all that stuff, you will see, it will get into a different set of regulations. It needs to every state will need to pass through that and all that stuff. So it probably it will happen, but the delivery mechanism will be different. Block, yeah, we'll talk about Block. I don't understand how Domino's does the internal delivery. Amazon is doing in the food sector same day delivery. Uh, yeah, so same day delivery is okay. I mean, same day delivery even outside of food sector, you can get sometimes same day delivery on Amazon, but in some cases you have to have minimum $35, etc. But here, what we're talking about quick commerce is like delivery in 15 minutes, 20 minutes, under an hour, right? Which is, we don't get it here. Uh, all right, Sam, you know the deal. All right, you have to turn your video on. Or might as well keep it on if you have to ask questions. All right, go ahead.
Oh, okay. Yesterday, I was thinking about it. They're talking about China being state-controlled capitalism. I thought about it. U.S. is sorry. No matter what, San Francisco in the Bay Area has more control over capitalism than China. I mean, you look at how high the labor costs are here. You look at all the laws. I'm sorry, China has more free market than Northern California. What do you think of that statement?
So it depends on, I think, when it comes to the free capital, US side is more capital free. In the flight of capital, you can take your capital in and out of US. China, you cannot do it. China is a controlled capitalist society, but we do have our own laws around the minimum wages, etc., which probably does. I don't know if it exists in China or not, but
China,
many countries you do not
China
have.
does.
Okay, so but in many countries we do not have that. I would still, when it comes at an investing side, I would still be on more on the US than in China, just because it is more relaxed, it is bigger liquidity, and it is more freer capital market than China is. Of course, are there any some pockets where the government is more regulate? It's more regulated in US than in China, of course. Like all, none of the infrastructure projects take off in California, but they'll run like this in China because the government either stays out, or sometimes the government actually pushes it. Government is pro growth. In our case, government will basically tie the hands down of a lot of private entrepreneurs in terms from regulations perspectives. So that's what. But when it comes to the capital markets or investing, I would still be investing more on the US side of a companies than on Chinese companies. And you know my portfolio, right? China is, I try to keep my China exposure to between to 5 to 10%, no more than that. All right, so let's get back to the markets. This week, a lot of theme was around AI, and this is what I don't understand. Or like we're trying to speak from both sides of mouth. The market is trying to speak. Is either a lot of market says, oh, AI is going to disrupt everything. And there are, there was also an article or a blog post on which the market sold off. But there's a fear around machines will take us over, right? And so that's kind of a dystopian fear, and the stock sells off. On the other side, we're also talking about, oh, these AI is so great that it's gonna replace humans, it's gonna be too efficient and all that stuff. And then both the things that, and then the market also sells off on the AI companies also. So I don't understand. So we look at Nvidia. Nvidia sold off after the earnings. But if AI has to be, AI will become as great, or call it great, or as big a productivity machine that it can replace a lot of the jobs that are currently be done by human, then why these companies are not getting the benefits from market side? Why the company like Nvidia, etc., even after posting great results, are not seeing the investor love? Right? So it's like a both sides. I don't know whether the market hasn't yet decided on which side it want to go and what it want to do. We have a disruption concern. On the other side, we have a concern, oh, it's going to be huge productivity, and earnings are also increasing of all these companies. So essentially, we've been trading sideways. So good chart from Bloomberg and Edward Jones, which talks about last 4 months. you know S&P 500 has almost returned nothing. And maybe we can look at a chart of S&P 500. SPY. Yeah, we've been trading. We were last here, wow, till here, which is what, October. We are still there where we were in October 27th. Exactly 4 months, right? November, December, Jan, Feb. We are on Feb 27th. That's what. So 4 months of sideways trading. Great if you were selling strangles or cold calls on the market. Market has not gone anywhere in 4 months. I think we are getting push and pull between what is this AI gonna do, how do you even model these things, etc. And for option sellers, that's been a great market. Yeah, go ahead, Vinay.
So Vivek, potentially both could be true, right? So if you look at the 1990s, there was a huge internet build out. Many of the companies that built it out did get into problems, right? Cisco was a high flying stock, and then they were saying picks and shovels, and it went down to a huge extent. It just recovered now. At
Yeah,
the same time, the internet did transform many markets and got rid of blockbusters and for massively major shipping, right? I think what could be happening is that because these AI companies are doing all these vendor financing deals, which is reminiscent of the 1990s when Nortel was selling to Cisco to Lucent and all that, right?
yeah.
I think that's driving a bit of nervousness that okay, if everything is so cool and shiny, why are these guys doing this offshore financing deals and all, right?
Yeah. So one is that. I think the other concern is, if these companies are generating so much of cash flow, why they're even going to the debt market?
Exactly. Yeah, yeah.
Uh, so,
Like, what's
so
your
that's
problem,
num
right?
so
Yeah.
that's number two. Number three, which I feel is because we have never seen companies like Meta, Google, and all these companies being a capital heavy, which is how their capital structure will now become. Their asset will now, they'll becoming a heavy in terms of their fixed asset, which had never been the case. And I was reading into, was a newspaper somewhere, and if we really look into their financial statements, many of these companies don't even break out what, in a in a I would say consistent way, what's their depreciation expenses are, because they never had these depreciating assets on their books. And so they, and market never bothered about it. Now market is trying to figure out, okay, you're going to spend collectively $700 billion of capex, and it's the depreciating assets. Now let me figure out how you're depreciating it, where you are showing it. Some companies show it, those depreciation expense, under a cost of goods sold. Some companies are showing it as an operating expense. Some companies are showing it in a footnote. So I think the third thing is that the analysts are still trying to figure out that in
Right,
this new regime of these tech companies becoming capital heavy and their expenses are all over the place, how do you even model it, right?
right.
And
And what happens if you take your assets out and give it to the private lenders, right? Then do
That's
we
what
have
Meta has
to
done.
depreciate it? Yeah.
So that's what Meta had done, saying, you know what, I don't want to take it on my books, but I
Yeah.
will, farm it out to private investors. Then you run into other problem around what's
Right.
happened with
Exactly.
Blue Owl, right?
Yeah.
So Blue Owl is going through its own issues, and they had committed to raise so many funds for Meta. So I think this is another thing which market is still trying to figure out: how do I model these companies? Because now the structure has changed. They're becoming heavy on the balance sheet side, which was never the case. They were enjoying all these multiples because they were capital light. Now,
Right.
since they're becoming capital heavy, why should you give the same multiples? So I think these are the top three, four factors, which is probably we're not yet figured out how to, which direction to go forward. So no wonder market is just going sideways on overall the market is going sideways. Right. So as we talk about Nvidia, let's look at Nvidia earnings. Maybe perfect segue into Nvidia earnings and how market is like punish the stock despite all these good earnings. So all the numbers are off the chart. They beat analysts' expectations on every single metric. Revenue is up like 73%. This company is not stopping anytime soon. They beat on bottom line and top line. Record revenue with largest quarter-on-quarter growth in the company's history, sequential growth, and full year revenue of $216 billion. It's a almost $5 trillion company growing at 65%. 65%. It's not 6.5, 65%. Data center revenue, which is where a lot of the valuation comes in, this is where all your chips goes, was up 75%. And the markets are, nah, I don't know what to do with this. And the stock is down 5%. They returned $41 billion to shareholders in terms of buybacks and dividends. And their guidance was higher than the highest of the street estimate. And the market still sold it off. This is what we are dealing with. Yeah. And if you look at, I don't have the chart, and if you look at from a forward PE perspective, I think Nvidia is trading at maybe less than 20 or close to 20. Whereas we are investors are saying, you know what, I would rather pay 50x for Walmart, which is a consumer staples, low margin, high volume business, than Nvidia. I don't know. Make it make sense. So I still, 210, 220 may not be, but at this price point, like what is happening to the market? I think there's an overall fear or around the anything that is AI. Probably market is taking a pause and say, you know what, maybe I'll wait and watch. Uh, what else? I see some comments here. Some investor bought more Nvidia last week. I have a short but didn't get a. I had actually had a strangle on Nvidia. It expires on April. So when the stock fell down, I closed the call side because I was like, I got into strangle in two different trades. So I closed my call side. I'm still holding a short put. I'll be okay to buy the stock if it get assigned at 165. Sold my Nvidia 194. I mean, I'm okay to hold this for longer. Google issues 100-year bond. Yeah, like 100-year bond have been issued by, I think maybe AT&T did it once. These are generally sovereigns will issue 100-year bond, but now the rest of the world is willing to lap Google's 100-year bonds. They know that the Google will be around 100 years. Right? Alfred says, I was listening live to earnings call soon as they talked about China, the price started to drop. Yeah, I don't know if it was, I mean, right now, even on this forecast that they've given, there is zero China revenue included in the forecast. And there was a news that probably they'll start selling H200 chips to China. I think Chinese government has probably approved them or something. Any additional dollar coming through the sale of China will be on top of their current guidance. So I'm still at this price point, I'm still bullish on this one. All right. Uh, this is what's happening. Even the revenue has been increasing. Overall, market from the weight of Nvidia in S&P 500 over the last few quarters, we have plateaued at 8%. Now you could say that, hey, maybe this jump in 2023 2024 was too much too soon, but we are also growing the revenue also, right? But right now, over the last 2 3 quarters, it has plateaued as a part of the percent of S&P. And this is a good news because it also means that there are other companies in an S&P 500 which are carrying the weight. If we really look at a Max 7, except two Max 7s last year, none of them even, all of them had underperformed S&P 500. I don't know what the status is this year is. You can look at it. But even for this year, I'm assuming had it not been for other 493 companies, the market would have been a worse situation. So it's good to see that rotation happening onto the other sectors, right? That was used to be one of the complaints of many market commentators saying, "Oh, all the gains in S&P is limited to these Max 7 companies. It's too concentrated and all that." There we go. Now you got the diversification. It's not only these 7 companies that are driving the market; it's the other 493 that are driving the markets, which is a good thing. So, few takeaways from Nvidia infrastructure: AI demand remains strong because they are building or investing based on the demand that they have. But we still have a skepticism around, oh gosh, $700 billion. When am I gonna see the results of it? It's becoming capital heavy, and why should I give you the same multiples? Both the things are happening together. But one silver lining that out of all these discussions in the market is we are not in bubble yet. Because generally we are in bubble when everyone is euphoric, right? The things are great. All these investments will pay off. AI is going to be the next best thing after the sliced bread. We are not getting that feeling. In fact, we are getting little opposite feeling of, oh my God, this is too much too soon. Oh, we have invested so much money. We got to be cautious. So I think having that cautious tone in the market actually is for me personally, is a sign that I don't think we are in a bubble yet. Right? We cannot be in a bubble when everyone is being cautious. That's not a definition of bubble. The bubble happens when everyone believes that the sky will always be clear, the roses will forever be red, right? I don't think we are there yet. Uh, this is another interesting chart of software versus semiconductors. Right? This basically compares what we are seeing on the Sasocalypse or called Sassacre, and the money has been going into some of these, flowing out of these software companies and going into the semiconductor, which is like say ASMLs and the memory companies of the world. Of course, from last in Nvidia's and Lam Research, the overall semiconductor supply chain. You know what I mean? So overall, from their performance perspective, right? The semiconductor as a sector since the start of 2025 is up like 50%, whereas the SaaS is like down 15%. And I think it probably showed up in a frustration from Mark Benioff. Didn't Salesforce decide to do a $50 billion worth of buyback? It's like enough, market is not even looking at it. It seems to be, let me buy back all my shares. But this is the case. We're looking at many of these uh, companies. Let me just get to IGV, right? And again, come on, it's an ETF. IGV over 1 year is now down 17%. Year to date, it's down 23%. Right now, and all it has is, apart from these two, Microsoft and Palantir, these are other ones which have not performed this year. CRM, Uplovin, Adobe, Intuit, CrowdStrike, ServiceNow, all those have been, market has punished all these stocks thinking that they will be eaten by Anthropic's new AI model. CrowdStrike sold off, or some of these cybersecurity companies sold off because Claude released some security plugin or whatever the new model. So it is where it is. And I have seen market has a tendency to swing too hard on both sides, whether it's a fear or whether it's a greed, whether it's a desperation or whether it's euphoric. Right now, we are seeing all this fear around SaaS. There will definitely be some companies that will never recover from it, but I don't think the SaaS as a sector is dead. Right? And I don't know which one will recover, which will not. Probably even the recovery will be in a different way. They will have to figure out how not to charge on a seat basis. When your AI agents start to interact, then all your seat-based pricing is gone. Each one of them have to start moving toward consumption-based pricing. Right? They have to change their pricing model. They will not have the same pricing power. But are they going to go away? Probably not. Right? I cannot imagine that suddenly a manufacturing company will say and start to focus on vibe coding their internal ID software company. All the software they start want to build on their own because just it is easy to build. I don't think they'll be spending time on that. I think the biggest beneficiaries of these Claude or any of these new vibe coding tools will be the companies, will be the current existing software companies who build software. Just that they'll be able to build it at much faster pace, at much higher productivity, at much lesser cost. So their customers will demand them to pass on those costs to them. So there will be productivity improvements for sure in all of them, right? Profitability questionable, but I don't think that every of these companies is gonna be dead. But we always have this. Have seen this time and again wherein this is going to kill all of these sectors. Just like I think when the internet came on, the retail sector is dead. Right? Now the Walmart is like become doing better than kind of Amazon the stock. But if you wind by the clock 20 years ago, like hey, retail sector is dead, internet is gonna take over everything. Come on, guys, we still have COBOL. So I don't think these sectors will be dead. Reminding me of a COBOL, there was, I think, Claude Anthropic released a plugin which will convert the COBOL code into the newer languages, and the IBM stock fell down, whatever, 12, 13, 15%. I think that was the most IBM fell down in a couple of decades. Right? Yeah. But imagine, we are still running a lot of infrastructure, banking stuff on COBOL. So if a COBOL has survived so long, I think many of these companies will. But it always happens. Market will either become too euphoric or it will become too pessimistic. Right now, there's a lot of pessimism on all the SaaS companies. Which companies will survive? I have no idea. So I'm taking exposure through this IGV because it does have a lot of these companies which have been beaten down by the market right now. Right? I think as a sector, it won't go away. Some of these individual companies may disappear in 5, 10 years. I, None of them gonna go away in 5 years. Let me put it straight, right? You will still have Intuit, etc. In 5, you will still have these companies. I think the questions are on the long-term longevity. Right? What after 15 years? Will these companies still be around? I think that's why the market is concerned about. Yeah. All right, so enough of Sasseker. We also talked about AI eating labor market. There was a report from Citrini Research. I've not read it, but I, I, has anyone read that report? Market fell off on this Citrini Research, which talked about, I think, that the AI will kill all the labor and will be a ghost GDP and stuff like that. But in any case, I think someone also tweeted that one of the co-authors or who contributed to the research report was a hedge fund who was short on these sub-AI stocks and all that. So you need to always take this with a pinch of salt, right? These doomsday scenarios on any new technology have always been written whenever the new tech has come in. Right? So 60% of today's jobs didn't even exist in 1940. We've always changed. New technology will always disrupt existing jobs and will figure out the newer jobs that will come up, which we can't think right now. Right? 40 years ago, we had what was stenographers. We had a copying department which is responsible for printouts. We don't have none of those jobs anymore. Right? Those jobs have changed completely. If you paid attention to these payroll jobs, we talk about non-farm payroll. Right? Why? Because of farm. Earlier, when 90% of people used to work in farm, then they start to move on the industrial economy, etc. Instead of showing that the overall employment has decreased, the government came with a new name called non-farm payroll. Let's look at only at the non-farm payroll, right? Because the farm payroll has been decreasing. Now majority of us of employment is in non-farm payroll. Right? Things have changed. Things will change. One generation will suffer. Unfortunately, it's our generation. I mean, have it happened with every generation, but we'll recover from this. We'll find a new jobs, new kind of a jobs, different kind of a job. Some of them you may not like it. Maybe we'll see a growth on the blue collar jobs. Maybe another services jobs, which will become more well paying than the white collar jobs, but the jobs will be around. These jobs have been around for centuries. We don't have a candle lighters anymore. Before electricity, there was a job of a people who will come and light chandeliers. We don't have those anymore. We moved on to different jobs. So I am I'm hopeful that as a collectively as humanity we will survive. We'll move on to different jobs, right? But disruption always happen. It's not fun to go through this, especially if you get impacted by it, which like our current generation is feeling the brunt, but it'll be good for the next generations. Oh, there's another interesting chart from Bloomberg in terms of US employment in thousands and US GDP starting from 1950s. See how many disruptive technologies have been through in these cycles. Industrialization, then computerization, internet, mobile, and now if you're looking at AI. There will be a dips while we're going through this changeover, and they'll figure out what the new jobs will be, or maybe the new entrepreneurs. Right? Maybe with this AI will create a lot more entrepreneurs because now it's very easy to create. If you are a software, it's very easy to create software or any other content. Who knows? Much easier to create new businesses. Right? Well, we'll figure it out. Keep an eye on a big picture, which is the fact that even for Q4 2025, we have earnings are up 14%. And then the long-term stocks follow earnings. This is a fifth straight quarter of double-digit growth. It doesn't happen, these are like kind of some of the rare phenomena that quarter after quarter, you're posting double-digit growths. So I'll still keep an eye on this one. I'm not getting out of a market. I don't care what Citrini research has to write or how the market react to it in a short term. I still focus on the productivity, earnings, because at the end of the day, my share is a claim on the earnings of the company, and the company continue to grow the earnings. I'll still hold it, right? But if you're concerned on the AI side, how can you AI proof your portfolio? Number one, don't get concentrated into one particular area of AI. Maybe you own the full supply chain, right? Semiconductor companies, cloud providers through which a lot of these companies will be getting access to these AI models, and finally the enterprise softwares, which will start to embed this AI to make their own tools better. Sectors, real economy sectors that will benefit from AI productivity. We have not even seen this just yet. Right now, all the discussions and the market gains are concentrated on this one, on the producers or enablers of AI. The next one where the market will start moving towards is the companies that get benefited by use of AI, the consumers of AI companies, right? Industrials, healthcares, financials, their job will become much better, or they can do the same stuff at much lesser cost because now they are using AI. We have yet to see that. I think market is a little bit concerned on market around this one. Will they be able to get this productivity or not? Right. So third in is don't have all everything which is a growth stock. Have some bit of a value stocks, and I don't want to box you into growth versus value, but not only high beta, high revenue growth stocks, also have someone which are available at a cheaper valuations. Finally, also diversify internationally. Right? If you look at an international stock market, they have done much better this year. Some of the markets, Korean market is up 55% in 2 months. And it is again very concentrated market. I think it is because of Samsung and SK Hynix. But this is the Korean market ETF up 55%. Brazil is up 20%. Taiwan 19%, probably because of TSM. South Africa at 18%. So uh, after many years, maybe probably after 15 years, we are seeing that the international markets, non-US markets, have come back to life. Right? People are finding that, oh, there is a value in international markets as well. So again, as a part of diversification, have geographical diversification in your portfolio. Right? So it won't hurt to have, let's say, some of these international ones. Again, I'm not putting claim on whether one should go in South Korean ETF. It's already up 55%. Right? Who knows where it could go? Uh, Anyone from South Korea? You guys can correct me, or have a friends or a family in South Korea. But what I have seen in my time during the market, both on the crypto as well on traditional finances, investors in South Korea have a way bigger risk-taking capacity than the degen investors of US. If anyone knows about South Korea, please correct me. But this is what any new crypto project coming in, South Koreans are the first one to jump in. Leverage ETFs, they are the first one to go in. So much so that the South Korean regulator have become so concerned, saying that if you now want to trade in some of these leverage ETFs and all that stuff, you have to do like a DMV, like online education class. But people are just putting money in. Right? I've seen during the days of Terra Luna and some of these new crypto coins coming in, and they are ready to jump onto this. There used to be something called especially on the Bitcoin side, it used to be a kimchi premium, saying some of these crypto assets you can buy in the US at X dollar and sell it in Korean and X plus some percent, because they are willing to pay higher prices for these, even these high risk assets like Bitcoin, etc. And I'm talking about 6-7 years ago. In that time, the Bitcoin was considered to be very high risk, rather all crypto assets. But there used to be a kimchi premium. Right? So have those investors push the overall South Korean market to a height that could be unsustainable? Probably. Right? So I'm not going to go and chase all this, but overall the fact is that there are gains to be found outside of US market also. So having some international exposure won't hurt. Okay, let me see some other comments. Vinay says, any thoughts on international? We talked about it already. Earnings growth is just one factor. P multiple contraction can be a big. Yeah, sure. Uh, there, we already, in some of these sectors, we've already contracted. Right? Look into ASML. I've had ASML for almost now 5 or 6 years in portfolio. So talked about ASML multiple times and why I like that company. But ASML also went through its own, ups and downs. When I think in 2024, it it didn't do much. Yeah, that was, or no, 2025, it did do much, but sorry, 2020, yeah, 2025 was this year. But I like the company. I mean, they have a strong moat. China is trying to catch up with them, but it will be at least a few years before China can catch up with ASML. Tariff agreement winner China, India loser Vietnam. All right, any other questions? Wow. Oh, okay. Marshall says he lived 13 years in South Korea. Risk taking is so true. Wow. Okay. I mean, I'm just an observer based on what I see or what I read in terms of what's happening in South Korea. Uh, ASML, KLAC, LRCX, these all are the semis. Yeah. I mean, there are a bunch of the companies in semiconductor supply chain, if you dig deeper into it. I don't want to get into the details because I've talked about the overall supply chain multiple times. All Oriental nations, Vietnam and China, is more of a gamblers, not just Koreans. Okay. Uh, that I'm not sure, but I've heard a lot about Korea and seen that. I'm not sure about Chinese. But Chinese investors, they are more into the property side. Government has been trying hard to have them diversify from the property onto the capital markets and others. So I'm not sure on, but maybe what you're saying is gambling. Probably they gamble on the property side as well. Really don't care how high the property market is. I'm still gonna go and buy it. Probably that was the case in 2021, 2022, wherein like some people had 6 or 7 apartments, just like 2008 in US. We had a similar situation in in uh, China in 2021, 2022, and that's why the China still hasn't recovered from that property bubble burst. Korea ETF Kospi is a great play due to memory crunch, right? That's why the SK Hynix, there are two companies which build high bandwidth memories, SK Hynix and Micron. Right? So SK, and then the other one, so and then you got a Samsung also. All right, what are some of the other stuff on market news? Other big news around private credit, and if you guys know me, where is my friend Aditya? He always asks about private credit. This is what I'm scared around private credit, right? The Wall Street is not generous enough that they suddenly want to bring, best instruments to retail investors. No, I don't think they are so selfless. They just want to make money, and the more sophisticated investors have refused to put more money on the private credits. So come on, let's skin retail investors, right? And now this week there was a news, Blue Owl, they stopped redemption on one of their funds, and what if we're talking about creating ETF and putting them in people's 401k? Ain't gonna happen. We looked at so many failures around the private credit. This is what I'm scared of, is the next, I don't know, the next shock to the market might come from somewhere we least expect, which is private credit. Because our assumption is banks are not involved in it. Banks are not lending to private um, borrowers. So banking system is safe. But what we don't know is some of these private credit, what's the bank's exposure to private credit companies, which is where we might get a hit from companies like Blue Owl, KKRs, right? Carlyle groups of the world, Ares of the world. We don't know what's bank exposure to these companies are. Bank don't directly lend to, because regulation prohibited them. After 2008, we put on regulations saying banks don't do this risky stuff. So risky stuff is done by these Blue Owls of the world, and the bank is lending to the Blue Owls of the world. And if the Blue Owl and these companies go under, there will be an impact, right? So now we saw that they've, there's a lot of stuff happening and a lot of chatter around, especially coming out of the Wall Street. Why we should have retail investors give access to the private credit? This is the best thing for retail investors. Come on, who are you kidding? Right? So there was some commentator, again, I don't know, I heard somewhere saying 15% of private credit could be in default. And this caused a lot of disruption on the financial sector. I think the news came out on Thursday or Friday. There is a company MFS in London, again private credit. They A private creditor lended to some company called MFS, which is similar to had the same gotcha as what we had in US or with the True Color. It's a True Color, right? The auto company we talked about a few months ago went belly under, and many of these private credit in the US caught with their pants down. Similar stuff happened in UK. They double pledged their assets and took a loan against their inventory twice. And those who lended money are now in a hole for $1 billion. BlackRock private credit fund, they cut their dividend, right? So there is stuff happening. This is what Jamie Dimon talked about. Whenever that, it wasn't True Color, something True, the company that make a lot of these wipers and all that stuff, which went back. And Jamie Dimon made a statement that there is never one cockroach. Maybe we are seeing cockroaches coming out now. And this scares shit me that now we're trying to create an ETF out of this private credit. It was Straight Street and I think BlackRock or Carlyle, one of them are trying to create an ETF. How will you create an ETF where you need immediate redemptions? Right? You need to move in and out of it. And then they say we're gonna give this access onto their 401ks. Come on. Let private credit be hands of private company. Let private credits be managed by those who have a lot of other funds where they've got an exposure to other things, and let retail investors make their decisions on where they want to invest. And I will still stay away from private credits personally, because you never know what the valuation is. It is whatever they tell you to, because there is no public market available where I can go and find out what the right valuation is. So I'm not gonna touch it, even if it is available in 401k, etc. But you decide what you want to do. But now the cockroaches started to come in. Some of these private credit, we are seeing some of the cracks happening in this industry, and won't be surprised if the next shock come out of it, because suddenly we realize, oh, our banking system has so much exposure to indirect exposure to the private credits that we lent it to many projects without doing a good due diligence, right? Another big news around OpenAI raised $110 billion. Amazon invested $50 billion, SoftBank $30 billion, and Nvidia took another exposure of $30 billion in OpenAI, right? So I thought some of the concerns that we had with, let's say, Oracle and Microsoft was big chunk of the revenue or RPOs were tied to OpenAI success, and market was little jittery around whether OpenAI will be able to live up to its commitments or not. Now OpenAI raised money, right? But market is now not rewarding Oracle or Microsoft, saying, okay, you remember I had a concerns around OpenAI's viability. Now that concerns are over, and now I should reward you for that. That didn't happen, right? But hopefully this, yeah, if OpenAI goes bust, that'll be a big, big, I would say, a shock to overall the AI stuff, and will move back a few steps. So good to see that they are able to raise funds and move forward with it, right? Whether it'll be OpenAI, whether it'll be Anthropic, who will be the winners, we have no idea. Maybe the winner, the founder of that winning company probably still in high school. Very much possible. Right? The winners of the internet were not Yahoo or those initial Alta Vistas, right? The winning companies came much later in the game. So, but we always go through this round of huge investments. We'll build something, become euphoric, bubble will burst, then the winners will come out. Okay, I'll skip the details of the deal. Uh, Another market making news was the block became flatter. A 40% layoff. I think this is the maximum that I've come across over the last 5-6 years. Ever since I started looking at individual companies, 10-15% I've seen. But I was almost like jumped out of my seat. I'm like, am I reading it correctly? It's like 40%. But this is what happened. So Jack Dorsey basically tweeted and saying, hey, this is what I've told in my company, that we're gonna lay off 40% of people. It has almost 10,000 employee, which itself is questionable. Is what are you doing with the 10,000 people? But let's put that aside. 40% haircut layoffs is a huge deal, right? Doesn't matter how much flab you had already, but I think he took a decision saying rather than cutting it every quarter or every year, I'll just rip the band-aid and then move on with it, right? So that's what they did. Some of them are saying it's attributed to their use of AI. I think they built a tool called Goose, which basically does the job of what 3 4 software engineers were doing. Sorry, I shouldn't say software engineers because I don't know really in terms of Goose is for improving the productivity of which part of their business. Could be in marketing, could be on software engineering. I don't know, but they have invested a lot in that. Other thing is they hired a lot more during the COVID and post COVID, so now they're just becoming leaner and meaner. I am 100% sure that this is not going to stop with Block. Investors now will start looking at all other companies saying, what are you doing about it? We had the same vibes when Elon Musk had fired whatever 80% of the staff from Twitter. And then there were fingers pointed at each of this, like Googles and the Apples of the world, saying, you hired a lot as well during COVID. What are you doing about it? Right? That time we did not have these AI stuff. So now if we know that Block had to lay off, became lean and mean, let's say half of it because of the usage of better tools that they build using AI, questions will be raised. Investors will be looking at each of the other companies, software companies, and say, when are you going to do that? So if you're working in software companies, keep your head down, make sure don't look, do your best, because I don't think it's going to stop here. This, I think this is just a start. You tell me, what do you think? Put it in comments. I'll read to some of the other comments right now. Or one dedicated session to supply chain. Just ping me on a meetup. I probably will be able to find the video where I covered it. I think it's been maybe a year or two since I talked about the whole supply chain and what's the investment opportunities. Because we were seeing this whole AI stuff, and I think that's what, maybe it's 2 years where I talked about. Uh, but I did not cover the data center building infrastructure. It was only related to the chip manufacturing. Right? Okay, so James has given us a 50 AI stock. Jack Dorsey is adept at AI at staffing up Twitter and all his funds by 100% extra. Yep. Maybe that's the case. Some of them they are talking the same stuff, saying, what are these 10,000 people doing there? Maybe they overhired, right? And now they're cutting it. But in any respect, I think 40% is a huge cut. And now think about, those people getting impacted for the decisions that were made by execs to overhire and now then to just cut them off in one go. AI, Asif's comment is clear. AI is just a Ozempic for software industry. Uh, oh yeah, James saying, yeah, Dorsey opened the floodgates to other CEOs slash weeks. Yeah, there will be question. This is just a start. This is not the end. This is just a start. Rajiv, didn't Jack Dorsey invested 300 million? Yeah, this was with Jay-Z. I don't know, Tidal or something. That's where they became blog, right? That's a dumb investment. I think at that point of a time when he invested, the whole thesis was we could create NFTs out of these music albums, and for me personally, I had XYZ and the stock went up 20%. I had a XYZ stock, and I sold off, and I talked about it. The reason that I sold off it is because I see Jack more focused on the Bitcoin side of the company, right? not on the Cash App, on the Square side. And I said I already have a exposure to crypto economy through other side, and it was a small portion of portfolio. I couldn't convince myself to add more to it. Then I said, you know what, I'll let it go. Um, but yeah, I mean, he's been more focused on the crypto side. Now that it's crypto winter coming, maybe he's gonna now focus on the Square and Cash App side. And then they also overpaid for Afterpay. What, 20 plus billion dollars? There've been some dumb investment decisions that have been done by Jack Dorsey. Right? Okay. All right. So looking at fear and greed index, we are in fear. Probably Monday, this dial should go further down. I'm waiting for it to move to extreme fear so that I can start deploying some more capital. But otherwise, I'll sit and wait and watch and just do the regular stuff around delta management. Right. Same stuff on the crypto side. Nothing has changed there. Overall sector performance, S&P 500 barely positive, right? And then the energy has been top. Probably with this whatever new war, it might go further high. It's already up 25%, and the materials is up 17%, etc. So there are some sectors which have done really well. There are some sectors which have been beaten down. Financial, I'm scared on this. I think this financials, there's so much of a tailwind behind financials, but these concerns around private credit and the billions of dollars that these companies have to raise for AI, and which we don't know whether it will pan out or not, is basically causing a drag on this financial sector. But rate cuts, deregulation, using of AI to cut down your cost are all tailwinds behind financial sector. Uh, Information technology, of course, because of all SaaS collapse and consumer discretionary. Some Because information tech has got a much bigger weightage as compared to other sectors, market hasn't moved much. Market is where it was. So what did I buy or sell this week? I just bought one stock, MercadoLibre. I'll review the earnings of it. I had a GTC buy order which I put in 3 or 4 months ago, and I held it because I knew if the stock fall down, I will not be able to buy it because then emotional, or maybe it will fall down further. So I put in a GTC buy order at a price point at which at that point of time I was comfortable to buy it, and it got executed. Right. So this, I think I'm probably gonna do this for a few more companies, is to take my emotions out of it. And I see, okay, I think this is the price point at which I want to maybe own more, just have a GTC order, and that's what got executed. I didn't sell any stocks this week. That brings me to the latest, how my pizza looks like on a portfolio and top 15. Give you a couple of minutes to view it, ask any questions. I think the change from Jan to Feb has been Berkshire Hathaway has come into top 15 and IWM has fallen out of top 15. I think everything else, overall leaderboard has remained the same. Some positions have shifted up and down, but not much of a difference. I will sip some juice. Have a questions, ask. Otherwise, I'll share this again after the end of March. So for those who are new, I share this top 15 at the end of every month. All right, Vinay. Oops, sorry. Forgot to unmute. Go ahead. Uh, Vinay, you'll have to unmute. You should be able to unmute yourself now. No?
Okay, now, yeah.
Yeah.
So you have a really small cash position, huh? Just 3%. The
Yes, that
rest
you
is all
should.
invested.
Sorry?
The rest is all invested, right? So you hold 3% cash,
So
basically.
this does not include my emergency. So this is all the non-emergency funds that I have available,
Oh, okay, okay.
right?
So you
So
hold other cash.
I have an emergency fund for 6 to 9 months, almost 9 months of my living expenses.
Got
I've held that since 2012. Thankfully, never had to use it. So, but that's sitting in a don't beat me. That's sitting in a CDs because I don't want to have any investment gains from that. That's just to keep roof over my head and food on the table in case everything goes south. So this does not include that emergency cash.
Thanks.
Yeah, I mean, I used to have a higher cash when I was in a job because you get your income salary coming in, but with only on since I don't have any salary coming in anymore, my cash position has come down. That's why I do more on the Delta Manager and focus more on that one. Okay, someone had asked a question around how much a stock versus ETFs. So I am looking at it. I have a 57% of portfolios in individual stocks, 38% is in ETF, stock ETF, and then you know the rest is cash and bonds. Okay, Riddick. Okay, let me see. Why Melly? I like the company, I like the business, and it fell down to the price where it at which I was comfortable to buy it, and I bought it. I will go through the Melly result. Yeah, Melly dropped after earnings. What's the total portfolio value? That I think I don't want to share that in a big forum. That's too personal a question on the total portfolio value. You shouldn't be concerned about it. Right? All matters is what percentage I'm invested into individual companies. Uh, that's the question. Yeah, but my portfolio is more than let's say 50K because sometimes I see on Twitter people talking about it. Oh, you should do this and that. Then I look at their portfolio. They're starting on a 25K on Robinhood. I'm like, okay, unfollow this person. There's no way his decisions and my decisions, the way that person will make a decision is very different. I mean, I've become very different investor, and those who have been attending these sessions over the last 5 years, you would have seen I've become a lot more conservative was I'm moving towards preservation than the growth, right? So I started my journey at 2016 with $25,000, putting into TD Ameritrade, and then kept adding to it. So, and right now, I become a lot more conservative. I don't have to do stupid things. I don't have to try to get 20-30% return. I get it. That's a different one. Make 10%, my life is will be set. So all I'm trying to do is avoid stupidity. Uh, you only became full-time investing past year. This is my I became full-time investor in mid of 2023. I've been investing along with my job since 20 passively since 2013, very actively in terms of yes, this I want to do it for long term since 2016, and since 2023 full-time. Do you do covered call on these holdings? Yeah, I mean, I have my option trades on many of these, right? It again depends on if the IV is high, I'll do it, or if I find a better good premium, I'll do it, and I do share it, right? It's all available for you to see, and let me just put that out. So you can see all my open trades here. Again, there is no charge for this. I just don't want it's too much of work for me to come and start putting in a Slack or on a Twitter. So this just gets updated as and when I do the trade. So right now these are all the open trades that I have. I have Apple, I have a short put spread, and no, so this is I've rolled up the put to have a 260 put on Apple, and I have two which one do I have? 16 Delta Strangle, and I rolled the put. So 280 call, 260 put. I have Airbnb. I have a couple of calls on Airbnb, Amazon, ASML, blah blah blah. I have these many open stock positions. Doesn't include my delta hedging trades. Otherwise, everything else is in here, right? So you can see it's a few different strategy, different lens. Uh, okay, so I'm not on Robinhood. I use TD Schwab and Tastyverse. Robinhood, once I looked at it when I think last year, a couple of years. If you are in options, it's not a great tool to use. I don't know, maybe they have improved it, but I couldn't even find the information that I needed to make a decision on Robinhood for any serious. And there are a few many serious option traders in our group. None of them use Robinhood. And I'm not known of any serious option traders actually on Robinhood. You can't even have all the information to make a decision. Okay, quick look at a crypto. We're looking at $2.32 trillion overall as of today morning. Bitcoin is at 65K, almost half of where it used to be. I think the highest was 126. But it is what it is. Right now we are getting into crypto, call it autumn slash winter, and we're waiting for that clarity bill to be passed to see what happens next, right? Nothing much on. Let's look at a couple of earnings and then we'll jump on to 13F filings. Okay, so let's talk about MercadoLibre, right? So any owners of MercadoLibre? It used to be my top single stock position for many years. I think it's only in last few months that Google had become a better, become bigger than MercadoLibre. All right, before I go there, Sam, you had a question. Okay. Oh, you lowered your. Where's Sam? Okay. Hold on. Yeah, Sam, go ahead.
I want to tell you how bad SoFi is. So I was looking for my tax forms. Last year, my account CPA did it by himself, so it cost hell of a lot, you know. So this year, I go to Fidelity. On the side of the screen, it says tax forms, and then I called the operator at SoFi. I said, "Where's my tax forms?" And then they go through this great maze, and then they said, "Here it is." So then I said, "Where's my tax form?" They said, "Well, you didn't trade enough." Remember, SoFi was the one that sold my crypto holdings a
Yeah,
couple
you
years.
talked about earlier saying SoFi did something on your account.
Okay, so anyways, so then I talked to a manager
Mhm.
yesterday. He says, "Oh, you do not have the privilege of having us give you a tax form." I said, "This is your obligation. I mean, if you want to compete against Fidelity, just give me a tax form." I mean, so they're giving me this de minimis BS.
Yeah. So
SoFi is not a good company. That's all I would say.
no, so I think legally, I don't think the brokerage firms are allowed to do it. Someone can correct me, but I'm also surprised that legally they're not obligated to give us the forms. I could be wrong. I could be wrong. They're really obligated to give it to IRS, I guess, but not to us. But again, I have no comments on SoFi. I never used it. I know the it's a one of a very active and a favorite stocks among retail investors. I just couldn't convince myself why it should be trading where it is, and in the long term, why it could become the next big thing. So I never owned SoFi as a stock. Uh, do you sell options on iBit? Last year I sold a lot of options on iBit, Johnson. This year I'm not because it's already down to now mid 30s. And other thing which I mean, if you have been on crypto, you would know it. So some of the, especially on the Bitcoin side, most of the gains come on a very few days when it will suddenly jump 5%, 10%, right? Since IBIT is already beaten down this year, so much. I don't want to then get, you know, called out at the 10% jump on one particular day. So I will start selling it again once it is above, let's say 45 or 50ish. But last year I sold tons of premium on iBet because the premiums are very juicy. So, but this year I haven't sold much on iBet. I mean, I can look at it. I don't think I've sold much on iBet this year. Which crypto platform do you recommend? I don't trade crypto much, but go with any of the regulated platforms. And there are a few on the US side, Coinbase, Kraken. I'm just like a buy and hold. I don't. And after the ETFs came on, I don't even touch crypto anymore. I can get all the economic exposure that I need through ETF. Then why should I don't have to bother dealing with buying and selling of a crypto. I can just do with an ETF. But pick any of the regulated exchanges. You got a Coinbase, Gemini, Kraken. I think all three should be fine. But again, I'm not a day trader. I don't trade a lot on cryptos. I like SESD. Yeah, SESD became bigger, I think, in my portfolio now than Melly. Yeah, it came to number three. Right? Okay, so Rajesh says, yeah, US brokerages are generally legally required. Okay, cool. All right, so let's jump on to the earnings. Mercado Libre revenue of 44%. This is the only company that I know of which has been posting more than 30% revenue growth now for 28 quarters, consecutively. So almost for last 7 years, they've been posting more than 30% revenue growth every quarter, right? So again, not surprised, revenues of 46%. From a business growth perspective, everything was fine. What as indicated here, what what the market did not like is the margin. Same was the story even in the previous quarter. Similar was the story in 2024 November, right? Beat on revenue, they missed on EPS because of the margin compression. Street didn't like it. I think the market punished the stock. Right? But if I look into the business metrics side, GMV up 36%, transactions because they have a big Mercado Pago is up, credit portfolio through their Mercado Credito. Then they got an asset management, which is Mercado Fondo, is all up 77%. The buyers are up. The active fintech users are up. Ad revenue, which is going to be the silent, I would say, a killer. Just keep an eye on this. It for I think a few quarters ago, it didn't even used to mention it. It's the same story that I'm seeing being replayed in different companies, right? 3 or 4 years ago, that I said, hey, look at Amazon's ad revenue. They never used to talk about ad revenue. You have to go through their 10K and into the details on their, the each individual level where they mention. There they will put what the advertising revenue is. I think 3 or 4 years ago, I said, keep an eye on this one. This is going to be a dark horse, which will start to become much bigger portion of their revenue, right? And now, last 2 years, I'm seeing, or maybe 18 months, I'm seeing now the analysts are talking about Amazon's ad revenue. Right? I'm saying keep an eye on Mercado Libre ad revenue. Again, they didn't used to mention it at all. Now they started showing little bit of the ad revenue. I expect this to become much bigger, and it's a higher margin business as well. Right? Now the margin is compressed. I understand that, but why it is compressed? I think it's important to go through that details. Higher upfront provision for bad debts, right? They provision because if you look at last 2 3 quarters, Mercado Libre has been growing like crazy onto the credit portfolio. It used to grow 80%, 90%, their credit portfolio. Now it's still at 90%, right? It used to grow at triple digits. So they're growing their credit portfolio, and earlier they went little slow because they were still refining the risk models. Now they are the comfortable with the risk models to tell them, whom to lend to and all that stuff. Now they're growing their business in Argentina, Brazil, Mexico, especially on the credit side. And credit portfolio is a high volume, low margin business. Right now they have to provision higher, basically set up a higher provision for bad debts, so which will bring down accounting terms, it will bring down your profits. They also lowered the threshold for free shipping. This they did a couple of quarters ago. This is again to drive volume, because there are also competition coming in Brazil, which is mostly from C Limited. Again, I'm a shareholder of C Limited, so I don't care. Any one of them win, it's fine for me. So they brought down the minimum threshold for a free shipping from 79 real to 19 real. It means there are a lot more customers who are using free shipping at a lower threshold. So you increase of volume, lower of margins, but it has attracted a lot more new buyers. So on a long-term basis, it's going to be good for the business. Third thing is that they made a strategic investment to expand their first-party retail business and the cross-border trades, right? And so which will contribute to overall margin contraction. I think all these things are good for a long term. I mean, market does overreact to some of these market. Some of market don't think beyond 1 year, right? When I say market, most of the analysts are sector, they look at max 1 year targets, and then they'll tell their portfolio manager, because portfolio manager live year by year. At the end of a year, if you are lagging the market, your job is at line. So portfolio manager say, tell me what I should do with the stock for the next year. If you think it's going to go down next year, if their margin compress next year, I will rather sell off and buy into something else. For me, I have a 10-year, 15-year horizon. If it's gonna go down next this year, I'll rather buy the stock if I know that it's gonna be good for next 10, 15 years. So market did the same thing with Amazon. They did it twice. Once the Amazon moved from I think 1 day shipping and then same day shipping, Amazon told we're gonna invest in building the logistics infrastructure. Market puked on Amazon. Right? I've seen it time and again. Again, time will tell, but I'm still bullish about this business. And it hit my new buy, price target, and automatically I bought more into my portfolio. Right. So that's Mercado Libre. Any questions on Mercado? So Shanta said reposting Murli question. Yeah, I'll come to that. I'll come to that. Let me finish the earnings. Expensive to get into Melli? Is there? Melli is not expensive. I mean, if you look at Melli, why do you say that Melli is an expensive stock? What we're talking of $89 billion company, and if from a metrics perspective, traditional PE, yes, it will be expensive. If you look at a statistic, yes, it's not cheap. It's just like it's in an investment mode. But forward PE of 30 is not that super duper expensive. So I think the stock is not that expensive. Is there any plan for stocks? Okay. So I don't even, as an investor, stock price, individual stock price means nothing. When I look at whether if the company is expensive, I look at the overall valuation of a company. $89 billion for this company is not expensive. Then you look at a valuation metric. Even if it doesn't, you can always just buy one share. You can buy a fractional share. If you have only $500 to invest, you can buy a fractional share of Mercado Libre. So individual stock price doesn't matter except if you're an option trader, because now we have to, the contract size become bigger. But for a stock investor, you can just buy a fractional share. And please, whenever you're looking at a company, look at an overall company valuation and then decide whether the company is expensive or not. Amazon at $3,000, or Amazon at currently at $200, right? If you've done a stock split by 15, it's the same valuation of the company, right? Not that $3,000 is expensive than $200 of Amazon. It's the same valuation. So from that perspective, Mercado Libre, I don't think it is expensive. All right, let's talk about the other one, which was the second one, trade desk. So trade desk beat on revenue as well as EPS. This is like a previous quarter. Everything was good on trade desk. Market puked on trade desk. It was down 16-17% after hours. They beat on both top line and bottom line. Free cash flow is up. Customer retention above 95%. It has always been like that. So stock because of the guidance. So they guided for revenue of $678 million, right? Which is 10% growth year over year and 20% sequential actually decline. Right? The stock has always been traded at an expensive valuation because it was a growth stock. Now, if you cannot show growth in a growth stock, market is going to punish. And that's what happened with Trade Desk over the last few quarters. This stock, oops, this stock was $90, not that far away. Right? We're talking about August, it was $90. Now it's sitting at 20, whatever, $23 because the growth has slowed down. If a growth has slowed down and you're invested in a high growth stocks, this is what happens, right? There are few reasons behind it. Amazon has moved into their space. So whenever Amazon move into any space, it has a tendency to disrupt it. So Trade Desk is also feeling the pain of Amazon coming into their space. So I still hold the Trade Desk that I had in my portfolio. And there was a question of 15 is too much. This is why I want to have too many of the stocks. You never know when one of your stock get disrupted. And I know someone who I respect a lot, who I learned about ad tech industry. He had some 30% position in Trade Desk. That person has become now silent. He doesn't post anymore. I learned a lot from him through his post around how the ad tech works. He's an excellent, excellent. I think he's a VC. But then you have a 30% position in one stock. I don't care. You might be MIT grad. You might be having an IQ of 160. I don't want to be in that position. I don't want to bet 30% of my portfolio on myself. Right? Forget about individual stock. So this is why I own a lot more tickers. It's just a risk management stuff. Right? When the stock is going up, all we see is the upside. We forget about the fact what happens if the CEO come under bus. What happens if the stock declines? What's going to happen to my portfolio? So you only get to know and think about it later when it is already too late. So thank God that I had only small portion of my portfolio in TTD. And it has been down a lot, but it's okay. We'll still survive. I still own Teladoc, which is down 90% in my portfolio. 90, the Teladoc is down 90%, right? So that's why I hate those stupid questions or tell me one stock on which you'll go all in for 5 years. I'm like, there is no such stock. These are pretty common questions on Twitter. There is no one stock on which I'm ever gonna go all in. It's just a stupid decision. It's not a you're gambling. You're not managing money for yourself or for someone else, for that matter. All right, that covers a lot of stuff. Now let's talk on to our 13F. Probably spend next half an hour to look into various 13F filings and across multiple fund managers. Let me sip some water. Or let me respond to the Murli's questions. And I think Samantha asked again. What metrics, risk, expected returns do you measure on your portfolio? So I did share a lot of stuff, a lot of metrics on my at the year end. I would request you to go there and look at it. There's a lot of stuff I shared in terms of the drawdowns and in the return. I used to track Sharp ratio. I stopped doing it because I don't consider volatility as a part of a risk anymore. When I was new to investing, I used to do whatever the Wall Street used to do, but then I realized no, I don't think the volatility is a true measure of risk. So I don't track Sharp ratio, but I do track in terms of my drawdowns or drawdowns, what happened, which month I had the most drawdowns, what's my return, etc. Do methods drive rebalancing or analysis, drive a portfolio rebalancing? Uh, Most of my rebalance, I don't rebalance my portfolio just because of the return, because return could be lumpy as well. My idea is to pick good businesses, and if those good businesses, um, and I do want to say diversified, right? So I will want to hold financials, energy, ACHD, and then some of the good businesses that I can follow and I can understand. Rebalancing on my portfolio is mostly around my delta management. I don't do traditional rebalancing of bonds versus stocks, etc. I do own bonds. Yes, I do own a little bit of a bonds in my portfolio, but I have other ways to hedge my portfolio, so I really don't need hedge bonds for. I don't use bonds for from a hedging perspective, so I don't have a big allocation to bonds. Most of my rebalancing is on the delta management. Hopefully, uh, that answers the question. Can we follow? I'm on a Twitter. I gave up Facebook uh, many years ago. So, but I became active on Twitter ever since I became full-time investor, because I said, hey, I find a lot of if you follow right people on Twitter, there's a lot of a wealth on Twitter. I mean, so much of a free information available. Of course, you need to follow the right people, right? And then I unfollowed some person even this week, and I learned a lot from that person around PayPal. But he knew the PayPal business in and out. And then this week, that person sold his PayPal shares and bought into another company shares. I looked at that company shares which he bought, and I'm like, the stock has gone up, the business is terrible. Looks like then you are just a momentum trader, because now the PayPal stock is down, but it is a much value stock right now. And thank you for teaching me a lot of things around PayPal. But this is where our association ends, because you are a different kind of investor than I am, and I'll unfollow you. So we parted ways on a very friendly terms, because then I realized he's more of a momentum trader, right? Whichever is hot stuff, you get into it. Probably does a great analysis of every hot stuff, but I'm not that kind of an investor. So you should know who you follow. There's a lot of people who will just talk about the stock when it has gone up and will just shut up because the stock has gone down, even though the business is good. I will talk about the business most of the time. I will. I don't generally talk about the stock prices, etc. And most of my focus is on understanding the business. Stock prices will take care of itself. So, and there's a lot of information on Twitter. So if you do want to, my Twitter handle is this. And I do post some of those. I'm not too active, but it occasionally I'll become active in terms of when the right moment. Like in earnings, I'll post earnings in on 13F. Now I post a lot of 13F stuff, but that's all I do. All right, let's look into 13F. Why 13F and what is 13F? Those who are not hearing it for the first time, this is the quarterly. This is a mandatory requirement in which the managers with greater than $100 million in qualifying securities have to file this form with SEC. And a lot of financial media and the Wall Street analysts, they also review this. A lot of investors slash traders, hedge fund managers, they review this to know where so-called smart money, right? Those fund managers who manage more than $100 million probably are smart, right? So that's called where the smart money is allocating their capital. It includes only US listed equities, some equity options, some bonds, ETF. It does not include international stocks or bonds or derivatives, mostly so it's not complete holding of a fund manager. So for example, let's say Bridgewater Associates might have $120 billion asset under management, but their SEC, the Form 13 might reveal only 60, $70 billion. We'll look into it. I don't know what the latest one is. So it is because they hold a lot of stuff which they don't have to report on 13F. Okay, I just want to make that clear. It's not 100% of the assets that have been managed by that fund. So let's talk about this. I think I started doing it, remind me, when it was like 3 quarters ago, I started putting into a theme specific. And again, this is a new stuff that I started doing it, I think in 2024. Uh, and I'm still improving on. And you guys can tell me what other information do you want to see, because this is still work in progress. I do it every quarter. Every new quarter, I say maybe I should add this. Maybe I should add this information, and we just keep on improving it. So first thing, are Max 7 or Lag 7? Here Max 7 haven't performed. Market says, they are out of favor and all that stuff. So this, let's look at it. I did tweet about it. The way I looked at this is number of the dollars committed. Right now I'm only looking at 6 because Tesla is a great favorite stock among retail investors. No institutional investor wants to touch Tesla. So essentially it's a allocation around the max 6. Overall dollars committed, top 5 slots are to 5 slots in top 10 are to max 7. Apple, Alphabet, Microsoft, Amazon, Bank of America, Amazon and Nvidia. So these are the two, and this is across 91 funds. I added few more funds yesterday, or was the day before. So right now I have 96 funds data. So still, despite all what has happened in these Apples and the Googles, they still form the biggest asset under top biggest asset under management across 91 funds. Right? So they're not dead yet. Breadth of holders. Right? How many fund managers actually have these? Right? Because let's say one person like Warren Buffett can invest $20 billion and can skew the results. So I want to see how many funds actually own this. Alphabet is own, again, these are one of the top, widely owned stocks. So Alphabet is number 1. 75 funds have exposure to Alphabet. Microsoft is number 2. Amazon is number 3. Meta is number 4. Nvidia is number 6. And Apple is number 7. So not only that these have top dollars, they are also loved by most of the fund managers. And they're also seeing some ongoing conviction in which the number of funds that have added to their existing positions, Amazon added by 21 funds. They still feature on the top of on the leaderboard of who is adding new positions. So I don't think these big companies are dead yet. I think on a long-term basis, when I look at these companies and what across the portfolio, how the individual smart money is allocated, they're still allocated, big time on these Max 7. Right now, this one is on. Okay, so I think I'll have another one. I talk. This is like new additional. Anyone have added additional capital? So you'll see Alphabet, Meta, Amazon is a new positions initiated. So this one is you've added to your existing position or new, and I'm looking at this one is only new. Right? So this is where Max 7 story I think is still alive. Now individual fund managers, and this is where you might, if you look at a few fund managers, you might get a different picture. Some individual fund managers could have sold Google. They could have sold Microsoft. And if you're following only that fund manager, you might get a different picture. So I want to look at across the fund managers. It says number 4. So I'll come back to number 4 again it says new positions initiated by fund manager. Means they never had in the previous quarter, they did not have Meta, but this quarter they have Meta. So this is a new position invested. Like Intel, Nvidia invested in Intel. Right? So that's where Like Intel got the most dollars, almost $8 billion coming from just one Nvidia. So is a Synopsys. Okay, so that's theme number one. Is Max 7 lakh 7? Not yet. Despite all the doom and gloom that we hear, that's not the case yet. Chip economy. This is where the semiconductor stuff comes in, right? These are the companies that are considered ADI, AMAT, AMD, ARM, ASML, Broadcom, KLAC, Lam Research, MU, Nvidia, Qualcomm, TSM, and Texas Instruments. If you want anything else to be added, do let me know. Nvidia is still the king. If you look at it, Nvidia has got $22 billion, over $65 billion, close to $66 billion across 91 fund managers. Nvidia has got 1/3 of that allocation with $22 billion, right? Uh, Bailey Gifford is big on Nvidia, $8 billion. So he's the biggest holder. So if we want to understand the thesis behind investment in Nvidia, you should go and read Bailey Gifford's reasons. Don't go and look at, let's say, Bridgewater's. Bridgewater has got very less allocation. Look at what Bailey Gifford has to say about it. TSM is number 2, $16 billion. Broadcom, Applied Materials, Lam Research, ASML, EDA, so and so forth. Okay. Q2 Management is the only one in ARM Holdings. No one else holds ARM. If you look at ARM, there's the only one, $251 million. No love from others. They have the highest dollar allocated, but well diversified among a lot of other players. Okay. Bailey Gifford has a degen position with all the chips in Nvidia. Yeah, the other one they have is like 400 and $300 million, but out of almost $9 billion, $8 billion has gone to Nvidia. So Bailey Gifford, I'm going all in it, not all in. They have a much bigger portfolio. We'll look into the individual fund manager also, if you're interested to see where they invested, what they bought, what they sold. But he's like, on the chip side, I'm all Nvidia. What else you want to look at? Anything else to be added on chip? Synopsys. Or maybe I should add CDNS and Cadence and Synopsys, but that's not on chip. That's more on AI. It is on chips because there's a chip design software. All right. We'll add CDNS and these two. When I open up the sheet, probably we can check there. Let's look at e-commerce sector. Okay, I have Amazon, Alibaba, BigCommerce, Coupang, T-Local, Globally Systems, JD, Jumia, MercadoLibre, Pinduoduo, C Limited, Shopify. What am I missing? What else should we add to e-commerce? Come on, give me some more tickers. So total amount invested is $68 billion. These are the top 3 rank holders: Amazon, C Limited, and MercadoLibre. Yeah, 60 almost $68 billion. Amazon has got $32 billion. 50% of the overall e-commerce is going to Amazon. Next is C Limited. Third is MercadoLibre. Again, MercadoLibre, all driven by Bailey Gifford. $7 billion they have. Everyone else has very small portion. Altimeter Capital, Brad Gerstner has got only $137 million. Whale Capital, $197 million. But majority is allocation coming from Bailey Gifford. Bailey Gifford is a big investor on e-commerce, so he probably has got the most most investment in most of these companies. Shopify, Pinduoduo, Coupang. He has been an early investor in Amazon, so I'm not surprised that he's got his fingers in all these companies. Warren Buffett has what? Amazon. Any other stands out in this one? Looking at Chase, Code 2 has got Amazon. Bill Ackman has got Amazon. When did Bill Ackman take position? Maybe we can go and look at Pershing Square separately on Amazon. How to get info for 13Fs? It's available for free on internet. 2022 Motley Fool pushing synopsis. Again, Motley Fool will give you, and I thank you for reminding. I have to cancel my subscription because I've stopped using it. Motley Fool, because I don't need a lot of idea generation right now. But I use the Motley Fool's service to get ideas and read about business, right? Then you decide whether you want to invest or not. Are you down on Shopify? No, I mean I've been on Shopify for a long time. My cost basis is less than $30, I guess. Me, so Shopify is down, but at my overall position, I'm still okay. Where's my Shopify shop? SHOP. Yeah, $31.36. Average stock buy price is $51, $20 of a premium sold over many years. So my cost basis is $30. I can hold. Is a portfolio percent available for funds? Yes, we can switch it to portfolio percent. Just remind me a little later. Okay, Belly Gifford, $31 billion we talked about. We read them up if you're interested in e-commerce. I've excluded the fund managers who are less than 50 million positions. That's fine. So that's mostly on the e-commerce side. So there were questions on MercadoLibre. Yes, there are some. I think Belly Gifford has been a very prudent investors. So if they are big on MercadoLibre, I think I feel better. AdTech. Right, ad tech total investment is $11 billion. Previous quarter it was 13. AppLovin is 7.76. Adobe is number 2. Trade Desk is number 3. Then who exited? Cotu exited from TTD, and Viking Global, they parted from App. These are the data that I've included. Adobe, AppLovin, I don't know what the APPS is. Forgot. ATY is, I don't remember the name. Some of these came from you in previous quarter. I think this is double verify. Magnite, PubMedix, Roku, Trade Desk. There are only 4 have any allocation. No institution, at least these 91, none of them have what do you call any allocation to, let's say, PubMedic. Anything that stands out? Again, Billy Gifford is big on, because it's big on e-commerce, also big on the ad side, $4 billion on ad. Cotu is on AppLovin. I somehow, when you look at these fund managers, my respect for Cotu management has actually decreased. And I'll tell you the reason why. In one of the others, when we look at I'm like, these guys will just come and pump and then forget about it. What else? Nothing. Nothing specific stands out. Let's look at the next one. Smart money investment in dumb money. Sorry, I'm a dumb investor. Retail investors traditionally called us dumb money. So how are they faring in a lot of these stocks that retail investors love? It's like ALAB, ARKK, ASTS, BlackBerry, Celsius, Coin, Circle, CoreWeave, Grab, Hims and Hers, Hood, Iron, Nebius, Oklo. These are all high beta retail favorite stocks. How are these? What's the institution money doing about this? CoreWeave is number 1 because it got investment from Nvidia. Palantir, which is so hot among retail investors, no institutional investor touches it. BlackBerry is still supported by just one person, which is Fairfax Holding, Prem Vatsa. He's been invested in BlackBerry for many years. He's still holding it. Iron, some love, no love for Nebius. So top 3 leaderboard is CoreWeave, Tesla, Rocket Lab. Wow, Rocket Lab 1.24. Maybe I should look at who bought or sold Rocket Lab. This is why I said, right, after I consolidated this, I'm like, my respect for Kotu management has decreased because I heard Philip Lafonte and the other guy of Kotu in one of conferences talking about how great the CoreWeave management is. How these are the like best things after Einstein. They have so much faith on this. They used to talk a lot about these people and now they dump the stock. Then I'm like, what the heck are you talking about? It means they probably build their positions, then they come on to conferences and talk about how great the management is. And when the stock goes up, then you dump it. Come on, have some conviction about the stock. And this is why you should never follow any one of these. I'm doing this just to know what they are doing, but I'm not going to blindly follow them because you never know what their motives are. I saw the same thing with these guys, Altimeter Capital, Brad Gerstner. Tesla's FSD, I think that time Tesla FSD 12 was coming. FSD 12 is great, this and that. And then you look at the 13F, they dump the stock. Whereas they're telling everyone else how the Tesla going to be a great company. And then they dump the stock. So follow the money or know the money, not what they are saying. These two could be different. You don't know what their motives are. Which is, because I was surprised Kotu management talking so highly about CoreWeave. You know my thesis around CoreWeave, right? Not a great business. These are energy traders, right? And I'm like, what are they seeing? And because they had a position. Now they dumped it. Now they don't talk about it. CoreWeave. Okay, enough of my rant. That's why I say don't follow any of them blindly. So Kotu management dumped the whole of their CoreWeave. And later on, we can look at when did they buy it and when did they dump it, which quarter they did it. But this is why you should never follow blindly any one of these guys. They all have their motives. Everyone who comes and talks on CNBC, Bloomberg, they have their motives that you have no idea about. And then you'll say, oh my God, I lost money because this person talked it and I bought it. Never do that. So CoreWeave is $4.6 billion, Tesla 2.32. But yeah, SoFi, very little love. Oscar, Palantir, only 41 million. Oh, yeah, we have a couple of them. I shouldn't say none. There are a few people there is one person in Palantir, David Katz, Matrix SA, just got 400K in it. But that's it. It's interesting to see Rocket Lab and TEM, TEM. Which is TEM? Tempus? Tempus AI. But these are the ones. All right, let's move on. Fintech stocks. Nubank has got a highest allocation. The stock has been pressured very recently. Hot stocks like Hood and SoFi, less than 2% of overall funds has gone to these stocks, which we love to talk about. Retail investors love to talk about. PayPal is still, no one has exited PayPal even after the dropping that PayPal has got. And Sezzle and Shift4 got no love from fund managers. So top three are still Nu, XYZ, and Chime, followed by PayPal, Hood, and SoFi. So look at who exited. Nu is number one. So out of all that I've considered, 1, 2, 3, 4, 5, 6, 7, 8, only 4 or 5 have any love from fund managers. Nubank is the highest one. XYZ, which is Block, number 2. David Tapper, Appaloosa, a very well respected guy. He exited XYZ. So if you follow David Tapper, maybe you want to see why did he exit it. And PayPal still got only one exit we see on PayPal. And then Hood, very less love for Hood. Only Altimeter Capital, of course. These are all part of the same crowd. Jason Calacanis, Brad Gerstner. So yeah, friendly investment, $146 million. No other fund manager have any exposure to Hood. None to SoFi. Hmm. I guess maybe either these investors are dumb because retail investors love SoFi. All right, moving on to the EV stocks. All right, $3.3 billion leader is Tesla, Lucid, ChargePoint, EVgo, some charging company, no takers. Right. Apart from Tesla, okay, so this is a mistake. I realized later. Apart from Tesla, only one fund manager is saving them, right? So Rivian has got only Belly Gifford and BYD. This is incorrect. Now I'll probably have to delete the post or redo it. BYD is a BYD Gaming, not the Chinese. I think I picked up the wrong ticker. But otherwise, no love for any others. Looks like Kotu had some exposure to Lucid, which they exited, and ChargePoint they exited. So only for all that matter, only Tesla and Rivian. No other EV companies or the EV infrastructure charging companies, nothing else. All right, moving on to the next one, Chinese companies. Total amount invested is $8.3 billion. Huge concentration. Top three, sorry, Pinduoduo and Baba, top two, like out of $8 billion, almost $6.5 billion gone to top two. I am surprised. Now I need to go and figure out why these people have exited Baba. Because I see a lot of fund managers, they've exited Baba in Q4. Lightstate, Kotu, Altimeter, Guy Spear, they all exited their positions in Baba. David Tapper used to have it. He still holds Baba. Um, Discovery Capital, not much talked about. Pinduoduo still has love, and others not much of a. So this is TME is the Tencent Music, Baidu, JD. I forgot what these were. Yum China. But yeah, if you invested in Chinese company, these are where the US fund managers are. Very concentrated into top 3 or 4. That's it. Yeah. Can you tell us more on PDD? So we'll look into PDD, who bought and sold and what did they do. I'll just took a note. We'll look at individual stocks and then we can analyze which fund manager did what. Okay, and energy stocks, this I think today morning. Berkshire Hathaway is a huge one because they own Oxy. Uh, Kotu has gone big on GEV, which is GE Vernova and Constellation Energy, because the thesis is a power for data centers. And the fossil fuel companies still have the biggest allocation. So Chevron, Occidental, GE Vernova, Constellation Energy, Exxon Mobil. I don't know what this. This is Berkshire Energy. This is I think Diamondback, and these are the um, renewable energy, Enphase and Nextera. This I guess is Devon. This is Enbridge or something. No love for renewable energy. Lot of dollars only for fossil fuels. Chevron is number one. Again, Chevron, most love coming from Warren Buffett. Maybe if you take out Warren Buffett, um, even then I think the picture is not going to be any different. Number one will still be Oxy, and then second will be G Vernova. But this is where we are. Who exited what? Stanley Druckenmiller exited Vernova, and Kotu exited Enphase. Cool. All right. If you have a question, you can raise a hand and ask me. Otherwise, I'll just continue to go to the next one. New positions invested. What did happen? Dang it. Maybe I got a wrong URL. Anyway, get back to that. Um, and invest in crypto ecosystem. Probably I didn't post it yet. Other one I want to say was, who are the fund managers who have, where they have the max percent of their portfolio in one individual stock. So Carvana, CES Investment Partners, I think even previous quarter they were there. If you're interested in Carvana, they have 83% of their portfolios in Carvana. You should go and read what they have to say about Carvana. Right? Nvidia has put 50% of their portfolio in Intel. We can find out what else Nvidia have. Then Don Yongping, he's got 50% in Apple. Carl Icahn, not surprised. Monish Pabrai has got 39% in a coal company, so on and so forth. So let's look at the new positions and investment in crypto ecosystem. And then we can do whichever way you want to look at individual stock and say what fund managers have done, or want to look at a fund managers and say what they're doing to different stocks. We can analyze in multiple ways, however you want to. But let me go through the one which I had a wrong URL, I guess. New positions initiated. You guys can see the Excel. What are you guys seeing? Just let me know. I just want to make sure I'm sharing the right stuff. What are you seeing? You're seeing, okay, then we are showing the right screen, right? So this is a new position. Like I said, Intel is all coming from Nvidia. Synopsys is coming from Nvidia. Then Apple, 5 fund managers have a new position, also not in Apple, Alphabet. But these are the top wherein they started these positions for the first time. The new one. Intel, Synopsys, Alphabet. Medline is a stock that I never heard about before. Anyone invested in Medline? Why it suddenly found so much love among 5 fund managers that it is now, it's like in the top 3 or 4 positions of new investment dollar going to Medline. What is Medline? MD Ellen, I guess. What did they do? Med surgical products are with the hospital, surgery center, physician. Anyone invested in Medline? Never looked at this company, never analyzed it, but maybe I would want to put and run it through my analysis and see why is everyone interested in Medline suddenly. This, it's a new IPO company. Or is this a company from Michigan, a privately owned company for a long term and now coming to public? Where are Michigan people? Uh, where where's our Michigan crowd? Uh, this Medline, I guess maybe that's the one. It looks like a new IPO. Anyway, so that may be case if it's a new IPO, then yeah, maybe some fund managers took an exposure for the first time. Okay, that then this is a different. I would look at it in a different way. I thought this been like some old company and suddenly why it has found so much love. Then Amazon, Nokia is all coming from. I was surprised. Who invested in Nokia? I thought it is dead company. Then I realized it's Nvidia. Invested in Nokia, $1 billion stake. Then yeah, there was a news around it. Then a Brookfield, BlackRock, AirCap, 21 Capital. I think that's the crypto stuff. Yeah, ASML Holdings, Lone Pine Capital. Right, and now bigger is who exited. Pfizer saw most 6 funds exited their position in Pfizer. This now I need, because I own C Limited. That's on number 2 of most fund managers exit. 5 fund managers exited their position in C Limited. Baba, we knew it, that people have left. Meta, Cadence, Flutter, ZTS, Intuit, so on and so forth. Again, this gives you an idea. I'm not going to change huge of my investment thesis just because five people have exited. I will still want to go and look at how the business has performed. Maybe these fund managers have yearly outlook, 2 year outlook. But that's given. Sometimes I can generate an ideas looking at why everyone is interested in Medline. Maybe it is a good business, right? But I'm not going to make a drastic change because one fund manager bought or sold something. Right? Okay, so that's one. Crypto, I think I did it crypto, but I probably didn't post it. This is on the crypto side. So I looked at ARKB, BMNR, BSOL, ETH, ETHA, IBIT, MSTR, MetaPlanet, NACA, Riot, SBET, SMLR. Out of all these ticker, only 1, 2, 3, 4 got any love. No, SMLR got no love. They got an exit. IBIT, not much. So Riot, I think maybe because Riot has moved into AI data centers, seeing some love. Again, not much of a love from institutional investors on all these so-called crypto stocks. Okay, what else? There was a question around where else Nvidia is invested in. So let's look into in a different. How to get rid of this? Okay. Let's look into a different angle, looking at a fund manager activity. Oops. Or the overall fund manager, what they did. We want to look at Nvidia, Nvidia Corp. Okay, so what did they do? I have everything. So Nvidia added a new position in Intel, $7 billion. They increased their core WIP by 94%. Now core WIP is 27% of it. Then they have a Synopsys, 15%, added a new position. And then they got a Nokia, 6%. Exited APLD, WRD, whatever it was, ARM. Nvidia had invested in ARM, now they've exited it. So only these four on Nvidia. Three are new positions. One they had a core WIP, they added more to their core WIP. Uh, More on PDD. Okay, let me make PDD. Let's look at a where do I have I can get for it? Not on this sheet. Okay, let me go back and look at what people did on PDD. PDD. Make sure I have the latest data. All right. Who done PDD? Who added? H&H International increased their position by 35%. Another fund manager increased by 35%. I see a lot more reduced. And there are a couple of exits on PDD. Altimeter, they exited PDD completely. And RV Capital, they exited it. But that's the overall value on PDD. We got what, $5 billion, $5.7 billion invested on PDD. Okay. Oh, I never, okay. I didn't look at this. This is much better way of looking at it. New positions added, new reduced, initiated. Oh, wow, this gives a different picture. I didn't look at this before. So if you're looking at Max 7, money has been rotating among fund managers. So 42 funds reduce their position in Alphabet, and then the 15 have added and 5 initiated new. So there's the money is rotated. So is the Microsoft, so is the Meta platform. So maybe the other way to look at it is let's say compare of Max 7, how much money was in Q2 and now how much money is in Q3. It looks like these are also comes as the top ones in which some companies have reduced their port exposure. They sold maybe some of them, right? Not completely exited because they don't show up on a completely exited, but maybe some profit taking on Max 7. Whereas I also see the new one, they added new positions on Max 7, which is interesting. Okay, you guys let me know what else you want to look at. I will just answer some of the questions that I see here. Uh, PDD problem, not multidimensional. Yeah, TMDX. TMDX. I don't think TMDX is TMDX. Okay. Poland capital 0.01%. So consider it as no exposure. No love for TMDX. What about gold and silver? I don't think those are reported in this 13F. Those are the commodities. Some of the commodities are not reported in 13F. General thoughts on current C Limited performance and future. C Limited hasn't reported their earnings, so I'll have to wait for earnings to see what the earnings are, and then only I can comment on it. I generally have no idea how to comment on the stock price because stock price at any given part of a time, it depends on what the market mood is, and there is no. I don't see any reason. I mean, I don't think I want to go back and now figure why the market is doing what it is doing. I would want to see the earnings of C Limited, and then I'll probably give my comments on what do I feel it as a company. Okay, any other stocks? So what it helps me is I'll put on some of my stocks and then see, okay, who's playing with my stocks and how are they playing with it, right? So this is where it helps me. What else? I had the Tiger Cubs. I don't think I have updated it for Q4. Which other we want to look at? All stocks are XLE. So this, if you are an equity fund manager, you will not be investing in ETF. So we can check it out, but I doubt that they will have an ETF in it because you're an equity fund manager. By mandate, you will be investing in an individual equities. Well, they have some XLF, HSI, but no XLE. Let's see who's got XLF. Stan Druckenmiller. But he's not an equity fund manager. He's a hedge fund trader. So that's okay. They're not surprised. BE is Berkshire Energy BE. BE, we saw a couple of reductions. Overall, looking at $214 million invested in PE. Not much of a conviction from any one of the portfolio managers, right? It's like 1.49% is the max one. So in BE, I don't see any conviction here from any fund managers. Yeah, I've not filtered with anything else. So I don't know what to tell or whose thesis to read because no one has any conviction on BE. Let me look on Uber. Okay, who exited Uber? Octahedron. Okay, that's Ram Aluwalia. Overall, we're looking at $4.4 billion. If I were to look at Uber thesis, I would go and read what Bill Ackman has to say. He's got a 16% of his portfolio in Uber, right? So, or go and look at Thomas Russo. He's got a 5% of his portfolio. Or Altimeter Capital, Brad Gerstner, 6%, almost 7% of his portfolio is in Uber. So now you know who you should look for, or whose investment thesis, which fund manager's report you should open up and see why they've invested in it. So in this case, I would go and look at Bill Ackman's. And now I feel better as a Uber investor. But he's a very, savvy investor, Bill Ackman, and he runs a very concentrated portfolio of 7 to 8 companies. And in that concentrated portfolio, if one of the companies is Uber, despite whatever is happening with the Uber stock right now, I feel okay. It might be possible that it'll sell off in the next quarter, but we'll only get to know in the next quarter. Right? But maybe I should go and read his thesis on why did he put 16% of his portfolio in Uber. I see another request for Spot, that is Spotify. Spotify. I never looked at Spotify. I don't own Spotify. Um, okay, Poland Capital increased by a lot, but still 0.18% of their portfolio. Doesn't matter much. Who's got the most conviction? Bailey Gifford has got a maximum conviction with 4% of his portfolio and $4 billion under investment. Or the second one you should read is Go2 Management. So yeah, these two people on Spotify. I see AT&T. AT&T ticker is T. Am I correct? Is T the ticker? Because I'll have to put the ticker. What's the T? Yeah, it's AT&T is T. So yeah, I think 0.72 is just a trader. So today he'll have it, this quarter he'll have it, end of the next quarter he may not have it. Ariel Investments has got 0.3%, not big of no big conviction out here. Costco. Again, very small value wise as well as percent of portfolio. Not much love for our Costco, even from Markel Thomas Gaynor or Chris Bloomstram, who are like fans of Charlie Munger. Even they don't, not much exposure onto Costco. Okay, I'm looking at VZ, Verizon, Hillman Value Fund, 2.34 million, small fund, but has got almost 2.5% of his portfolio in Verizon. Maybe it's because name suggests a value fund in Verizon with value stock. Probably that's the case. The next one is security stocks. Hey, hold on. Good. So now I got one more theme to look at, which is called security stocks. All right, so let's duplicate this. One sec. Oh, come on. This doesn't have duplicate. Why Google Sheet and they have a different one? Let's put it near crypto. Security. Okay. Give me the names. Security ZS, Okta, CrowdStrike, Palo Alto Net Worth. What others? There are more. Fortinet. I have to go to my watch list to remember which other security company. Qualys, Sentinel One. Is that it? Come on, there are more. Zscaler, I already got it. ZS. Okay, BUG as an ETF, CIBR as an ETF. Okay, let's start with this. Alrighty. What do we see here? Fortinet. No change and nothing. Sorry. Yeah, Fortinet has got Terry Smith. Fortinet, I understand. If you look into the Fortinet's numbers, it's like not a huge growth, but good cash flow, good return on invested capital. I looked at this company like year, 2 years ago. I'm like, wow, I never realized it's a good business. As a business, it's good, but it's not growing, so it doesn't get much love from street. It's a pretty steady business. Then number two is Zscaler, but both of them are supported only by one individual fund managers. Right. Oops, I have to take off Riot from here because that. And what else to take out? MSTR. Okay. I'll fix it later. IBIT and SMLR. Maybe I should update it to only pick from this and not which is already there. Yeah, but that's the case. Only for no CrowdStrike. That's surprising. That is surprising. CrowdStrike generally considered to be the best when it comes to the stock market performance, but no love from fund managers, guys. Whoever recommended this, asked this question, Ramesh, thank you. So I never had this security as a theme. So next time I will also have an additional theme which says security ET, cyber security. Yeah, no love for CrowdStrike. It's surprising. Oops. Okay, what else? Visa and MasterCard. Let's get back to looking at individual companies. Okay, I can do it here itself, right? Visa. Oh, no, it should be good. Visa. Wow, a lot of companies are in Visa. Sorry, a lot of fund managers. So we're looking at how do you want me to sort this? Should we sort based on the maybe the value? I can't do it on based on value. Come on. Okay. Maybe I'll have to figure that out later. But I don't know who do you want to Aditya, you asked for Visa, so Visa, MasterCard. I mean, looks like there's a lot of love for them. Overall, we're looking at $22 billion in Visa. And fairly, I mean, $1 billion here, a couple of $1 billion here. Warren Buffett has got $2.93 billion. Viking Global has 1.39. Biggest conviction is coming from Chris Horn, TCI, 18%. And if you guys recall, it was the best performing fund for 2025 by a lot margin. I mean, it left all other industries. Sir Chris Horn, TCI, it's 18% is on Visa. 7% Fundsmith is in Visa. 9% of Value Act is in Visa. 12% of Egerton Capital in Visa. Yes, a lot of love for Visa here. Next is MA. Fewer fund managers, but I would say much less. Yeah. So Visa was like $22 billion. MA is $10 billion. Yeah, $9.3 billion. But Guy Spears 16% is in Visa. Am I reading it right? 16%, $22 million, 16% of Guy Spear. What is fund is only now what, 120, $130 million? Who else follows Guy Spear? Can correct me. Or maybe this is only that is coming from 13F filing because we might have a lot of non-US stocks. Possible. I don't know. This is only 13F. This seems to be like 120, 130 million only. Poland Capital's 5%. Yeah, maybe you should look at what Poland Capital has to say about it. They got $1.2 billion in it. Or Chuck Akery. Yeah, got it. Yeah. Chuck Akery has got 18% and he's got some $1.7 billion. The famous Akery three stool framework.
Because I think just recently, I think Europe and UK are talking about creating their own payment network. So Visa and MasterCard are both down. So I was wondering if there's any fund managers here who are still bullish. I know this is the net percentage they hold, but has anyone tried to enter given the recent corrections in prices?
We'll only get to know if a new position are added only in the next 13 hours. These are as of end of December. These are
Right.
Q4 2025. Now, fund managers have 45 days to file their 13F. So end of March, we'll get the results by May mid. Then we'll know what they did with their positions with MasterCard or Visa. But this is as of December, end of December.
Okay. I think that news came later, but
Yeah, so then probably we'll know it only
yeah.
next one.
But I mean, for example, I think almost both of them are lower than they were about a year ago.
ServiceNow, what about ServiceNow? Yeah, not much. Maybe ServiceNow, probably we should look at all these SaaS companies in their Q1 13F because the SaaS companies got beaten down over last 2-3 months. That will be interesting to look at how many of this after this Sasocalypse or Sassacre, how many of the fund managers scooped in these stocks at a cheaper valuations. But I don't think we have this. Probably December doesn't reflect, may not reflect much because ServiceNow, I mean, not much of a capital allocated to ServiceNow. $1.5 billion, not more. All right, okay, that's it. We'll open up for the breakout rooms. Or if you have any other questions on 13F, you guys can let me know. Do you have a details for manager performance and can we find top 5 performer? Can you see their holdings? No, 13F actually doesn't have the performance base. What we could do is if you know some site that details out the fund managers and what's the return that they have given, let's say for 2020, but 2025, then maybe I can find that information and then you know uh, build a correlation between that and then look at that fund manager. I don't know which fund manager out of these 96 because the 13F doesn't talk about the performance. If you know of particular fund manager, you can tell me, hey, can we look at this fund manager and what did they do? Then that I can tell you. But I don't know which fund manager did better than others. Okay, and yesterday I was working on something else on this one. It's work in progress, so it will be a little you know I would say could be buggy. But what I wanted to do was to look at how the transitions have happened. And this came to me when I looked at the CoreWeave stuff and realized that they sold off their CoreWeave. Okay, you guys still seeing Excel? So I wanted to check how did they change their position. So see CoreWeave and let's say these are the people that were in CoreWeave across. I have a data starting from Q. Started doing this what 2024, right? But I don't think Q CoreWeave was there. So over the last 4 quarters, this is how fund manager change their position in CoreWeave. So look at this. Okay, let me ignore. Only keep altimeter capital. So bought or not all code 2, sorry. What am I? Okay. See, they bought CoreWeave in Q1, bought in Q2, pumped it up, go to the media and say how great the management is, and then they sold it off. I hate these guys. Right. So I was trying to build out a history of how these fund managers have done with these individual stocks, and this is still work in progress. But let's see. Maybe we can try to check like some of them others. You have any stock in mind? Oops, where did the chat go? Hold on, chat window. Okay, he says look at Bill Ackman and Bill Ackman's holdings. Okay, so let's go back to Bill Ackman. There's a just keep coming here. Bill Ackman. Bill Ackman Pershing Square. Top holding is Brookfield, number 2 is Uber, third is Amazon, fourth is Alphabet, fifth is Meta Platforms. Like I said, Bill Ackman runs a very concentrated portfolio, right? So top 8 accounts for 97% of his portfolio. What did he add? He added Amazon, increased his Amazon position by 65%. What did he exit? Exited Chipotle. Wow, he exited Chipotle? He used to be a huge proponent of Chipotle. And he still did nothing on some of the others. And reduced which one? Oh, he reduced. Oh, okay, this is G. Okay, I understand why these are two different, because I get the base level there were 2 records of G O O G L G O O G. But I did merge the tickers. But that's okay. I think Alphabet is still on the top. But if you're a CMG, Bill Ackman exited from CMG. You should go and see why he did that. Because he used to be a big proponent of CMG. Okay, anything else on round 13Fs? Let's say what Bill Ackman did. Can I do it on the other way around? Let's say Bill. No, it's only start from a ticker. Maybe I need to find the reverse of it. Start with the fund manager and then do it. Okay, Chipotle, right? CMG. Let's go CMG. CMG. No, CM. Oh, come on. M. Whether up. How many tickers with the C we have? CMG. Okay, on CMG we got Bill Ackman, Code 2, Daniel Loeb, Standard Druckenmiller, Maverick, 0.72, Viking Globals, or the last, ever since I started consolidating this data, which is 2024 Q2. Wow, Bill Ackman had, wow, he sold off. So he's reduced over past few quarters and then suddenly gone to zero. Code 2 owned CMG in Q4 2023, then sold it. Daniel Loeb owned it in, he still owns it in 2024. Rest others, Viking Global, consistent holdings, or others are very small holdings as compared to Pershing Capital. But yeah, something around this. So Daniel Loeb bought in Q4, 4,700 shares, and Pershing Square Capital sold 21,000 shares of Chipotle. Interesting. If you are a Chipotle shareholders, something for you to think about and read about either Daniel Loeb or Bill Ackman. They took opposite sides. Okay, is that it? Any other taker? Last call. Maybe we'll till 1 p.m. We got a 3 minutes. Anything else you want to look at 13Fs? Nope. All good. No other stocks you're interested in? It's your call. All right, so we'll open it for breakout or ASML. Let's look at ASML. ASML. Overall, $2.4 billion. Who had a new position with almost 5% allocation? Loan pile capital. Triple front partners. Who the heck is these guys? 12% in ASML. I never heard of these people. Or Dorsey I've heard of. 18% in ASML. A lot of people added to their positions in ASML. SEG management added like increase their position by 75% in ASML, and H&H International they decreased by almost 90%. They still hold ASML though. ADM. Oh, ADM. Which is this company? Tom Gainer exited. He had a very oh, sorry, Tom Gainer has got a very small portion in Dodge and Cox. 0.5. Not much conviction on ADM. What is ADM? I don't think I ever looked at ADM. Oh, Archer Daniels. The agriculture commodity company. They were into some accounting scandal. ADM. I think a year ago or 2 years ago. I mean, I never bought it, but they had some issues around there, some accounting stuff. Maybe let's look at if some of the folks were in ADM and then they quit later on, then that will tell us something that maybe the accounting scandal scared them. ADTN, ADM should be further up. ADM. There is only 2 takers of ADM even for past few quarters. So no one bought much or no one sold. Yeah, looks like only 2 fund managers have interest in ADM. And Markel has been consistently almost no change in the stocks, very little change in the stocks over the last 2 or 3 quarters. And Dodge and Cox upped their position by a little bit. That's it. Nothing much to be gained on ADM. Only 2 holders. AVGO. Broadcom. Broadcom. Anyone taking a big portion of the portfolio? Or maybe I should start highlighting. We'll do that later. Cantillon Capital Management has got almost 9% in Broadcom. Next biggest is SEGE, 6% in Broadcom. I see a lot of reductions and one exit. Okay, Ram Aluwali, he exited his position. But an altimeter has reduced by 95-96%. So if you have seen Brad Gersner talking about how Broadcom is great, show this chart. Say, why did you exit? Why did you exit your position or reduce your position by 95%? Yeah, so that's on the Broadcom side. ARC. No, there is no ARC, at least in the no one has any exposure to ARC. Now, this is like micro cap. Do you have the right ticker? Ramesh, it's not ARC. Okay, ADM. Oh, that's the Arthur Daniels we already looked at. Or must be AMD. Oh, no, okay. So yeah, we already talked about it. I think someone asked for ADM. Anyone adding Nvidia or I think that's a question for us. How many different stocks do you hold? Um, hold on. Where's my so many tabs. I forgot where is that information. There we go. Holdings pivot. Number of stocks. I have 44 individual stocks and I have 16 ETFs. Now, out of 44, I guess maybe the 20 are the ones that I look at. So when I look at the earnings, oh, hold on, I'll tell you which one are the big ones, right? It's like many of them are dust. Um, so when I look at the from an earnings perspective, so how much of this is 10? So 15 stocks uh, are the ones where I have more than 2% allocation of portfolio. So out of 44, the others have less than 2%. So I won't even spend lot of time on that one. I only look at the earnings, etc. if they have got more than 2% allocation. So rest of them are like Teladoc is down 90%. Probably it's some basis points in my portfolio. Yeah, if it recovers, it's fine. If it goes zero, doesn't hurt much because it has got no more capacity to hurt me. So, so there are, yeah. So I think the number of stocks really doesn't give you right information because some of the stocks I'm just holding it in case it's like those are like a lottery tickets, right? It can't hurt me more because it's a very small portion of portfolio. But if it recovers, I get a lottery ticket. Um, CHTR charter 26%. Who's got 26% in one? Makaira Partners. Oh, hold on, I have to go someone at the door. So we're looking at charter. I've never heard of this Makaira Partners, but they got a big position in it. A Lab, only one. Maverick Capital, but not much of a conviction, less than 2%. That reminds me, how about A Net? Arista Networks. Again, not much. So Giverny Capital is there. These is a hedge fund, so probably they'll exit it the next quarter. But only one, what Giverny Capital has got some 1.83%. Not too much of it. LITE. LITE. Is it Lumentum? What is LITE? Yeah, Lumentum. Okay. The stock has been doing great on the Lumentum side, but this is again December, end of December. So octahedron, which is Ram Alwal, so he got 3%, 2.5% allocation. So Lumentum looks like all went in Lumentum first time. It's only new position. None of them had Lumentum. So let's look at Lumentum chart. Maybe these fund managers also just chasing the hot stock. Oh, okay. Okay. Well, let's see. I mean, whatever they did worked out at the end of a December. If we had a Lumentum because maybe it was going up or whatever, they've done the study, they are pretty happy if they have not sold off yet. So we'll get to know, you know, 13 of doesn't tell you the date on which they sold off, or at least I don't see that. But yeah, if they're not sold off, they're pretty happy. Target price is 505. It is way beyond its target price, I guess. It is, yeah. Do you have a section for data platform companies? Section means in 13F? Nitesh? I mean, we can create one like we just did for cyber security. Let's do data analysis. Copy. All right. Oh, come on, I have to pick one. Okay, let's pick one. Okay, give me the names. Data analysis. Tickers. Snow. ORCL. Nitesh, give me the tickers. You asked for data analysis. What is Teradata ticker? Is it TD? TDC. What else you want to see in this one? Databricks is not public. Is that only 3 companies? Come on, we gotta have more. Is that it? Okay, so let me name it as, instead of keeping up with the SaaS, let's do for a SaaS because there are only 3 companies and who cares. We got Now, Adobe, CRM, Intuit, Palantir, only one holding on Palantir. Palantir we already looked at under retail favorites. Which other SaaS companies that got hit, currently hit by all this AI stuff? Figma, FIG, PayPal we looked under fintech already. Snow. Okay, let's try with that. Oops, keep it here and then run it. Come on. Oh, Too much of a data. So NOV I should exclude. Okay. Wow, Intuit, we see 3 exits on Intuit. Cotu exited Intuit and Figma. Not surprised they exited Figma after talking so good things about Figma. Now they're out. Viking exited Intuit, and Adobe Markel Group exited Adobe. Let's look at Adobe from other perspective. ADBE. Wow, too many of them. Thomas Gaynor. So let's look at only his profile. Oh, it's not been. I'll ignore this one. It's like, yeah, bought it in Q2, held it in Q3, and then sold it off in Q4. That's not much of a conviction. Bailey Gifford, Bridgewater. Bridgewater has actually increased its position in. No, not increased. It's kept it the same, almost same in Adobe. Which other we want to look at? Poland, William, David Tapper. David Tapper is out. I mean, he went out in 2024 Q4 itself. No more. Thomas Gaynor, we already looked at. Bailey Gifford. He initiated position in Q4 2024. Sorry, Q2 2024, still holding it. Bailey Gifford should be here. Otherwise, something wrong with that. We're looking Adobe. Don't have Bailey Gifford here. Okay, I have to look into that. The cross, there's something wrong. Oh, not something wrong. There's some rows are hidden in it. Okay, so then Bailey Gifford is there. Yeah. Okay. Nothing wrong. I think some of the rows were hidden. All right, so we got SaaS companies ticker. Well, James shared a picture. So let's add the others as well. A CRW CRWD. We already have it in other one. Let's do ADP. FICO. S&P Global is SPGI. Accenture ACN. Atlassian is Team. Monday is MNDY, I guess. DocuSign. Give me ticker for Walters Clover. I've never owned, never looked at that. ServiceNow is now. Workday's WD. Salesforce is CRM. Adobe, we already have it. What's the ticker for Walter Clovers? It, okay. If any funds bought IBIT ARKB, we can look at them. It's a big one. So I want to look at exits. Figma, one exit, Intuit. Some of them exited. Monday, not much love for Monday. 51 billion or million dollars. S&P Global is still at 8.5 billion dollars, but Chris Horn is contributing $6 billion. So altogether, Harris Associates got 2 billion in CRM, and that's the only position that Harris has in all these SaaS companies. Anything specific you're interested in? FICO is number 3. Adobe is number 4. I don't see. Again, I think for the SaaS, we should look at. We should go for the next quarter. Then we'll know in terms of after all this 2 months of Sassacre, what did the fund managers do? Okay, let me open the breakout rooms. Let's